Good morning. 8 o'clock in the morning, Central Standard Time, the 19th of August, 2025. Welcome to the Risk Neutral Trading Journal. This is my personal virtual trading journal. The idea here is that I start the stream every morning, 5 days a week at 8 o'clock this time, and it runs through the complete cash trading day until 1500, providing complete transparency and accountability for any trading on this account. No trade will be taken off the stream. Therefore, it's, this is my journal, right? So why would I want to trick myself? That's not what the point of all of this. So first of all, this is not for financial or trade advice. There's a disclaimer in the description here. Any times that you see on my charts or my that I refer to with my voiceover or my narration here is Central Standard Time. The idea here is that I don't multitask well, and I believe journaling is important. So for me to focus on trading and be able to screen snap and type and whatnot in a journal doesn't work very well for me. This is the perfect solution. Everything on my screens is captured in much more detail. Everything is captured in the entire cash market from 8 o'clock in the morning and then open at 8:30 until 1500 in the afternoon. My voiceover here provides insight as to what I was thinking based on what I was seeing on my screens, and it's all captured. The reason I stream to YouTube is because I can then, well, first of all, it kind of adds, I think, to the credibility, the transparency, and the accountability as a permanent record. Also, it's out there publicly for all the world to see. And I can review the streams on any device, so I don't have to be standing here at my desks to do that. It's streamed in 1440p high def, so if you're viewing this on YouTube and it's a little grainy or whatever, click the gear icon and select high def. It's 1440p and 60 FPS. I'm not monetized in any way, so likes and subscribes would be super and would help the channel. It's nice to have a crowd, you know what I mean? Trading's a lonely business, so there we are. Let's jump into the business at hand now, as we do every day. I try to keep the forecast pretty much, or the format pretty much the same for both my familiarity and my way my brain works, and also for any of those who are watching here. Reports out today are not hugely important. We have building permits, housing starts. All eyes this week are on the Fed in Jackson Hole. I mean, that's pretty much what the waiting game is all about. These are the building permits. There's hardly anything in earnings. Home Depot was out earlier, which was a fortune teller, or should have removed any questions that you had about what was going to happen to the housing starts and building permits. And there you are. Now, also, this is investing.com, and it's free. I use the free version completely. This is Financial Juice, which is similar on this side to the permits and things, numbers, but it provides more of a squawk box, deal on the right side. Also, this is free. You can pay for either one of them, and I think it's fairly expensive, but I don't believe that I need that, and I want to try to have the stream based on something anybody and everybody can do. So there we have that. Of course, here we are at 12 with Levitt again. The, you know, the 500-pound gorilla in the corner is the unplanned or the random risk. Right now, it's front page headlines, all this story with all the EU leaders coming over here to back up Zelensky so he wasn't, you know, ambushed again when he came to visit at the White House post the Putin-Trump story in Alaska. That's, I guess, front page news. Now, let me back up a minute here. These are the slowest 2 weeks seasonally. The data shows these are the slowest 2 weeks in the trading year, second only to the 2 weeks of Christmas, New Year. What does that mean? That means that most traders are on vacation and extremely light liquidity. Yesterday we were at about 60% volume for that same period of time. And if you traded yesterday, you'll notice that it was just a small, flat. Here's yesterday's RTH session. You'll see that it's a perfect Gaussian distribution, absolutely rotational, about 20 handles wide. Absolutely flat. Very light liquidity. Now, you need to be very aware because light liquidity means there's very few traders in the market. They're all on vacation. Makes sense. They're all watching the Fed, you know, fly fish in Jackson Hole. Makes sense. This market makes sense. However, because it's light liquidity, it doesn't take much of an impetus to shock the market into a violent volatility because there are so few traders. When the market is thick and deep and there's a lot of liquidity, it takes a hell of a lot more size to move the market and increase volatility. In this kind of a market, it does not. So you should stay on your toes and aware, in my opinion. I noticed last night was kind of funny. We opened, excuse me, we opened at the exact same price as yesterday's ETH session opened. I don't know that I've really ever noticed that before, but there you go. There's a tidbit of useless information for you. So my charting then is, and let's get to the pre-market. My charting is, this is IRT. It's my basic charting setup. These are the E-minis, E-mini NASDAQ, ES, and this is the micro composite chart. None of the things I do are complicated or mysterious, and you'll notice there's no indicators on any of either my charts, IRT, or Bookmap. So the micro composite chart is my idea of the idea of a higher time frame view. It's the RTH session only, and these are daily candles. Wherever price overlaps, draw a volume profile around it. And in so doing, it generates a micro composite VPOC, excuse me, these red and green high and low volume nodes, which just indicate a high volume node, low volume node, high volume node, low volume node. That's all in the micro for the volume profile of the most recent micro composite. These red and green lines are pushed automatically to Bookmap, as are the session prices. Here you see we're red across the board. We're at about 9, wow, that is extremely low, 91,000 contracts since the open last night in the ES. Use extreme caution here. Wow, the micros, 100,000 contracts, 118. And we are at about 0.1% off. And that's based against settlement, which let's look at this. Here is settlement. Oh, I lied to you. There's settlement. So if we're below settlement, it's a loss, or red, negative change. If we're above settlement, it's positive change. It's real simple. All right, this is Bookmap. Here is my my micro composite column, and I enter these values manually. BPOC, all-time high, all those kinds of things. This is the high and low volume nodes, which are pushed automatically. This is the full session volume profile, which started plotting at 1700 last night and will continue through 1600 today. This is not the ETH. This is the full session or the old-fashioned Globex. And this is a mess. This is my RTH volume profile. It is set, it was set, and for years worked flawlessly to reset itself every morning at 0830 my time, Central Standard Time, when the RTH market opens or starts. It would reset. It's been having a big problem doing that since the last upgrade. I don't know whether it's an increase in volume, but I tell you, this should be a telling day because the volume is so light. What I've done this morning is I've changed it from at time 8:30 to session start 8:30 Central Standard Time, and we'll see if that helps. I also have it set to restart on double click, so I will have that as a fallback. It's been real frustrating. This is my important column. This is my notes column, and the first thing I do, these are the notes and the percentages, probabilities from yesterday. First thing I do is clear the notes, okay, because it's a new day. Here is the RTH VPOC from yesterday, where we closed yesterday evening, 68.75. I'm going to put that over here as a naked volume point of control. That is the naked volume point of control from the most recent auction, most recent RTH auction, let me be clear. Then this next thing I do, which is important to me, is to reset the column title to the expected open type. And the expected open type, I'm going to try to make it as easy as I can by widening this out here. Still are not seeing what I want. Unfortunately, the previous close is right underneath of the overnight volume weighted average price. But the way you determine the open type is, where are we trading now? Assuming that we would open right here, right now. How does that relate to the previous RTH close? Well, there's the previous RTH close. So we're lower than the close. And how does it relate to the previous RTH range? Well, there's the previous RTH low, and the previous RTH high is up above us. So we are lower in range. We were yesterday. How convenient. This dictates the statistics that will be applicable to these session prices, which push automatically from IRT to Bookmap. Once again, nothing secret, no secret sauce, nothing magical. You do have to wear a, tall pointy hat and have a magic wand, but other than that, that's all. This is, everybody, all these internet guru types try to make this seem so complicated, and I've got this special stuff. Absolute BS. These are the prices. Value area high, developing value area high. The difference is the developing is for the current auction. Value area high and low are for the previous auction. Settlement. The overnight mid. The overnight volume point of control. And there are no indicators over here. The closest thing I have to an indicator, and you would win the argument, because they are calculated, are the Globex and the RTH VWAP, volume weighted average price. It is calculated, so I guess you could call that an indicator. And then the rest of them are just price levels and data. Something that does hang up some people often are the IBs. The IB, there we go, which is an old acronym for initial balance from the market profile days. What these two levels actually represent are the high and the low of the first 1 hour of the RTH trading session. Nothing more and nothing less. They just move down. The low moves down with price. The high moves up with price as we trade through the first hour. And at 9:30 Central Standard Time, these set and they do not move any longer. That's it. The high and low of the first 1 hour of the RTH trading session. There is some statistics based around those after they have set after 9:30, but that's all the price level represents. Okay, let's look at how the statistics work here that would be associated with those price levels, and they come from this beauty right here, which is my statistics study. You notice that we opened lower in range yesterday. IRT conveniently highlights the correct open type column, but only after the open. Coincidentally, we're going to open, I'm assuming we're going to open at the same open type today. This study is, again, very simple. It looks back at 2,000 days. Of these 2,000 days, we opened lower in range 588 days, 24%. Of the days where we opened lower in range, we revisited the overnight volume point of control 83.8 times, or 493, whatever. 83.8. Overnight volume point of control. 83.8. Whoa, this is tough, huh? There you go. And I will continue to do that down the list. Overnight mid, 83.2. Overnight mid. I realize it's, when you see it explained and done this way, it's like, Jesus, is it that simple? You're absolutely right, it is. And some people will make you think that all of this is just some sort of, something out of Star Trek. It's absolutely not. And there's no reason why anybody ought to try to keep this a secret. And to be honest with you, I freely share all of these price levels here, not the statistics because I just can't. I mean, it's a function of the software. I can't export them. I share all of the price levels freely, starting live at 1700 Sunday night through 1600 Friday afternoon. If you'd like to have these levels pushed automatically 24/7 for those periods, for that period of time, directly from my IRT, drop a thumbs up and a subscribe and a note in the chat, and we'll make a plan. I'll get them to you. You can use them here in Bookmap. It's a cloud note column, or you can use the in say Excel or somewhere if you just want to see the numbers. No problem. I'm happy to do that. I do it for several other websites, so it's not a problem at all. What's going on here now? Let's see. And we're ahead of schedule now. Worries me. I'm usually always behind. Anyway, let's move on to the next one then. The previous close is 73.6. Well, we know that that's hiding right over here under the VWAP, so 73.6. How do I know that? Well, because I can look over here and see the label for this particular line, and it is unfortunately right underneath of the overnight or the RTH VWAP from yesterday. This is the EVH, this is the RTH, so it's not going to move anywhere until the session starts. Next to all we have, make sure I'm on the right window, the IB high, which is 70.7. That's a good one. Let's see where that boy is living. By the way, now, again, here's the IB high, and it's under the previous RTH high. Yesterday, we traded up, put in the high of the day, which was in the first 1 hour, obviously, and therefore it is also the IB high, and we never got back there again. So the IB high will be the same as, and where is that? That's 70.7%. And the reason I'm doing this is to show you how to do this, IBH. Now, why did I put those initials? Because the minute we open, the IB high and low will move to the current session, because what are they? They are just mark the high and low of the first 1 hour. So this will no longer be here unless it's a really bizarre coincidence, nor will it low. So I put the initials beside, and therefore I know what 70.7% represents. Later in the afternoon, I'm going to go, what the hell was this, if I don't have the initials there? So that's important to me and perhaps to you. Value area low is 69%. Okay, it just got covered up by the thing, but we're going to go with it anyway. That's the value area low. Now, remember that the value area low is the high and low of the previous auction. And if you're astute, you'll think, wait a minute, so what happens when the ETH session ends and the new RTH session opens? That means the previous ETH will be the previous auction, and you're exactly right. That's why when we open, I change my charting and IRT from full session to day session only. Then the value area high and low do represent yesterday's RTH session, the previous auction, and the DVAH and VAL represent the current auction. So there you go. Good for you. And the next thing is the next thing is my TLab snap. And you ask, what is the TLab snap? Well, the TLab is a bookmap Discord chat room started by a guy named Tom B., who is, I believe, as he states, a professional trader with 46 years experience. I will say right up front, he doesn't trade live, nor does he call trades in that room, or whatever you call it. He doesn't obviously post his accounts, and I'm pretty sure you're never going to see a Lambo or a, why is it doing this? You're never going to see a Lambo or a bunch of gold chains or something, but I believe that he is what he says he is and how he represents himself. It's the only site that I recommend, including any of the other bookmap sites or chat rooms. Come on, man, what is going on here? Trying to get a snap. Oh, there we go. I'm doing all kinds of things wrong. There we are. You see why I can't multitask, right? So every day at about 6 o'clock, I post the news reports and something to do with earnings, if that's the case. And every day at 8:20-ish about, I post a snap that looks like this. And it's just to give everybody in the TLab that doesn't have this kind of charting access to all of these numbers and things they may want to reference. I don't know if they still appreciate it. I still get comments if it's wrong. Nobody ever says anything if it's right, of course, but that's pretty typical, isn't it? So anyway, the TLab, one of the things that made me stick over there, or that, you know, I find adds credibility, you will never be solicited for anything, nor is anything ever for sale. That's pretty huge if you stop and think about that for a second in the internet today. So there you go. And I don't recommend any of the other TLab, any of the other Bookmap Discord sites, because I haven't certainly been to all of them. I've only been to 2 others, and they were pretty much typical. The guy was trying to sell something about the 3rd word out of his mouth. And that's perfectly fine. And that's fine if that's what Bookmap wants to support. But it's not of interest to me, and therefore I don't want to just blanketly endorse that. I don't think that would be honest. So here we go. We are getting ready to open here in 5 minutes. This is something that I do just to point out quickly. I mark the open of each session with this blue line, and then I can just glance out of the corner of my eye and make sure that I have the entire session in view. That's a new thing I've been doing, and I really think it helps me keep aware or cognizant of context in the trading session. I also try to keep this scroll to about a price high, or a point high here. Going the wrong way, sorry. About a point high. That also gives me a sense of scale that I can relate to. Now, one thing that's really important, of course, is if you're going to trade, you better be able to do that. And the way you trade with Bookmap is you have to activate the trade control panel and select a way that you will interact with the application to trade with your mouse. If you choose chart, only the active data column is hot. If you choose dome, you can only trade with your mouse in the dome columns. And if you choose both, obviously. Now, you can trade with your keyboard after you set that up with hotkeys, but you need to have the focus of the computer on the application before the hotkeys will work. And that's a function of all computers. The next thing I need to do is activate multi-brackets, which is the way I trade. And I use a risk-neutral risk management system, which ought to be obvious from the name of the channel. This is the smallest package. 2 lots, it needs to be even. Size 2 lots. The stop for all of the packages at one location in 12 ticks stop. And once you've decided these 2 things, the first take profit target is automatic. It is for half of the package and for the same number of ticks as the stop is a loss. And then you can divide up the runners. To determine the stop size, you can use ATR, you can use, chicken bones, voodoo, whatever you do, however you backtest. My serious recommendation is the first place you start is account preservation and risk management. What's the risk tolerance of your account? And you don't want to have a stop out of that parameter. Then you set up your, as I said, and it's for a 4 lot or anything else. It's just obvious. There's 4 lots. There's a stop, half the package, same stop as same profit target as the stop is a loss, and then the runners. That's all. That's it. I then do the multi-trade story because I am let me make sure that's right. I'll make sure that's right in a minute. But anyway, now, so we're ready to trade. And one thing else, the last thing I do is after I've set all that up, I confirm the package size, and then I click the button here. And because all of the data I need right here is the same as right here, I don't use these brackets and things because I use multi-brackets. And then when I click the button again, It hides the trade control panel, so I get the real estate back. And I have the full, view here for stats. And I have cancel and close. So there you go. Ouch. Hit my hand on the mic stand. That's pretty mic. Boom. Okay, we're getting ready. We have opened. Oh, and we didn't reset. Well, that's pretty damn disappointing. I don't know what to do, to be honest with you. There's no... This is bullshit. Such bullshit. Sorry. This is such crap. There it resets. Maybe I need to do that every day. I don't know. And I'll save that. Worked for years and then quits. Same machine, same everything. So we've reset. Now what I will start to do is flag the migrating VPOCs. Isn't as necessary anymore as it used to be. I used to maintain a much more zoomed in view so that I would not see this yellow line continue to plot, because it will plot the entire session. My solution to that, to keep my mind abreast of where the POC had been, was to flag the migrating volume points of control. Now you see we have gone down and reached our target of 83.8% of the overnight volume point of control. We've also traded over the overnight mid, so the two highest targets, and not to be outdone by the close. We've already tagged out 3 of them of our statistics. There you go. Now I've done this for a reason. I want to slap the vertical line on. There's the vertical line for the start of this session. Okay. Whoa, look at us go. Well, they're not liking something that's happening here. They're not thinking this is a lot of fun right now. And I will change my charting to full session, and that's real simple. All you do is select the chart, hit the trigger button, and boom, there you go. Now, this is yesterday's RTH. Here's today. Yesterday's RTH. Here's today. Save that thing right there like that. And I also plot the exact same configuration for the micros. Excuse me. If I didn't get the mute button in time, you'd all be deaf. Sneeze big over here. All right, save that one. Now we have the micros saved. Everybody's on the current. I also push the micro levels too, by the way, and share them freely. Oh, look at us go. Well, we are definitely falling out of bed pretty hard here. Past previous RTH low, which would be right there. And yes, that's exactly where we went. So the market is not liking the level where we are. We've traded under the micro composite VPOC. It's up above us. We haven't taken out the previous naked volume point of control of this high volume node, though. That's interesting. You see how the IB low pushes down, the IB high is resting right up here where it belongs. High and low of the first 1 hour. That's all it is. Let's see if we can get this right here. There we go. So we are 1 point high, and we have the full session in view. And it looks like that's not doing a very good job of marking the full session, but And I'm just crazy enough to want to do that. There we go. So, if you're a spastic trader and want to really, you got to click that mouse like you're killing snakes. There's some BPOC migration short, and yeah, Merry Christmas. Not me. Now that we've opened, and looks like we have everything reset here normally. That's good. Let's just see something I bet is really funny. Oh, well, 69% volume compared to average at this time of day. It's not so bad. I thought it would be lower than that, actually. Yesterday, I looked and it was down in the just barely 60. Anyway, so there we go. And let's get back over here to the business at hand. Be right back. Oh, good morning, Antonio. Our Portuguese, or our correspondent from Portugal is with us this morning, Antonio. I don't know if I mentioned this in the pre-market because I don't script that stuff, but the purpose of this stream, as I said, is transparency and accountability. And this is a TopStep evaluation account from zero to hero, from the very beginning, streamed and captured, and every trade recorded through soon the XFA and then the live. That's the idea. Now, I had a hiccup Monday, I guess it was, or yesterday, which was, I think, Monday, right? Jesus, it's incredible. Trading is a strange sport, Sometimes you just lose all track of everything. That's why it's nice to have somebody, some interaction and feedback in the chat or wherever else it is, Discord, wherever we decide to go, because it's nicer to be with a group, I guess. So, yeah, 2 of the 5 accounts, the way this works and the way that multi-account trading works, when I put a trade on here, it's immediately copied to the other 5 accounts. And any result that happens here is exactly the same there, win, lose, or draw. The idea is that you can compound your winnings or, of course, losers. So these 5 are about 1 trade away from all being over the profit target and into the XFAs. So yesterday I log on and 2 of the accounts are closed, and I think it's another data drama with with Bookmap or whatever they are, TopStep, and I end up going to support and on and on and on. And well, come to find out this data is rhythmic, and this is obviously Bookmap and IRT that I trade with. Well, TopStep has this new thing that they're going to try to force everybody to use TopStep X. So they just decided that without, any conversation, they'd close those 2 accounts when they came up for the renewal, the rebilling. Well, I got on the phone, and yes, everybody agrees that's wrong and it's not the correct thing to do and all this stuff. And we'll see. And I'm waiting for the management team or whatever she referred to them as decision. Now, I've only had my trust, and I've only really used TopStep. I actually first heard about them like back in 2015 or something. And I think that they are, and have been until recently, the most reliable and dependable and all those kind of things. But this is a real random deal here. So, news at 11, I'll let you know how this turns out. What I have done in the interim, rather than, yesterday was just kind of shock and awe. So I have a very part of my trade plan is if I'm on tilt or something has happened, I haven't slept well, hungover, whatever it is, I don't trade. I'm aware of that, and I realize I'm not up to speed. It was real easy to do because yesterday was like a flat line, not a day to trade, in my opinion. No meat on the bone for me, for sure. So easy to stay out, and I did nothing. Now, last night, or in the course of this, I have enabled the 3 accounts, thinking, well, okay, I might as well continue with that until they let me know. The reason I didn't want to do that, all those 5 have gone along in lockstep together. They're all around at the same point, give or take a little bit of money to do with slippage or whatever, of passing the combine, all of which would be passing in the profit target with the next 2-lot risk neutral trade, which goes to both targets. So now you're up to speed. And I'll show you the snap, which I still haven't worked out exactly how to take snaps or display the account and the progress without, exposing what I think is data that I shouldn't expose, account number and then password and that kind of thing. This is, God damn. Come on now. This is crazy. Okay, there we go. This is an example of all 5 of the accounts. This was stupidity. This was overtrading. But consistency rule, profit target, everything else is all right. And you see, settle down, let's trade like a big boy. You see the P&L curve. And this is representative within a few dollars up here of all 5. So you can imagine, and as I told this girl, and this started in November, huh? So I've not blown this up. I had some issues early on, and some personal stuff happened in February, but, settle down and trade it right, and here we go. So you can imagine my disappointment yesterday. And I have snaps of all of those accounts. They're all, which I've provided to them and all this stuff. And this support person said, well, yeah, I see your point, and that's not right. So we'll see what happens. The original argument was, well, if it were an XFA or a live account, yeah, we wouldn't do anything, and you wouldn't be forced to use TopStep X. But because it's a combine, we will. And I said, yes, but the word says if you need to buy a new combine or restart or whatever it is. In other words, if you blew it up, if you hit your, you blew up the account, you need to reset or whatever. I didn't do either of those things. The only thing that happened was the monthly recurring bill. And the disappointing part of the story is the last 2 or 3 weeks, I've had several opportunities that I passed over to take that successful trade, and they would have all 5 been in the XFA, and I wouldn't be having this conversation, but, snooze, you lose. Hindsight's pretty easy, right? It's like trading. It's like the internet guru guys that trade in the rearview mirror. Yeah, no kidding. Everybody can figure that out. So now you're up to speed with how I trade, why I trade, this account, transparency, accountability. And I'm scratching my head as to what I'm going to do, what my alternative plan will be, because I'm definitely going to have one now. And then I'll have to make that decision probably this weekend. We'll see. Okay. So we're all over the board. We are slapping back and forth in a 54 to 69. So we're basically 15 handle range. There is light liquidity. Oh, let me also point out here that seasonality wise, these are the slowest 2 weeks of the year, second only to the Christmas New Year weeks. And it's only common sense. It's the end of the summer. Everybody's winding up holidays or whatever, getting ready for school, blah, 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 assuming that that's got to do with you. And it's the Fed. They're all fly fishing in Jackson Hole. So anybody that's and everybody knows it's the slowest week, seasonality. So I guess they lump their holidays together and they figure, well, let's really make it low. That's a double-sided coin. We can either have a day like yesterday, right here, which was a whole lot of nothing in a big hurry, or a small shock to the market or to the auction can induce huge volatility because it's so thin in terms of total volume. If you look at the book, it doesn't look that thin. Basically, this is what we look like every day, in my opinion. But when you look at the total volume traded and the action of yesterday, it definitely indicates low volume and low light liquidity. So, and seasonality wise, I know that's a fact about these 2 weeks. So my guess is, or my advice is, and what I am doing is I'm going to stay sharp and be extremely cautious. No matter how much I want to take that last trade, that even makes me more cautious because I'm aware of that emotional input. Hyde is over there kicking me in the ass. Your monkey mind says you want to win, you want to be right, you want to predict whatever, and that is absolutely all of the wrong things to think when you're trading. You need to think in probabilities. And I need to think in keeping the right damn screen up. Sorry about that. I'll be right back. Okie dokie. We approach the first half hour, the first 30 minutes. Now, because I am attempting to eat my own dog food here, I am considering approaching trading as a statistically and consistently profitable business rather than a video game or gambling. The first thing you have to recognize when you're thinking like that is that this is a random market. The outcome of the next trade statistically is 50-50. What does price do? It goes up or it goes down. That's all. It's like a coin flip. And over a large sample size of trials, you get 50. It'll narrow down to 50-50. So there you go. Okay, having said that, then how do I approach it? Well, I first identify a setup that I feel has merit, and then I try to specifically identify the context which validates that setup and that entry, or I should say the entry for that setup. And then capture a statistically significant data set of that setup and those criteria to determine mathematically if you have a positive expectancy or edge or probability or, pick a word you like. And if you do, then you trade that every time it presents itself in the live market. That's not just me thinking and figuring all that out. That is I'm parroting actually but I agree with completely, the most successful traders in the world. Ed Thorpe, Jim Simmons, Paul Tudor Jones, Ray Dalio, Druckenmiller, educators, traders, Tom the trader, the best loser wins guy, Tom B in the TLab, Broad, Static, Lefty, those, Garrett. I mean, from the top of the food chain down to our level, anybody that's recognized that, realizes that that's the correct way to trade. And if you want to have long-term consistent profitability. So the trades that I am working on vetting at this point, and the only trades I'm taking for the last little while, and which produced that lovely P&L curve up to the, nearly the profit target so far, are the IB trades, and there are two of them. One is the IB failure, where we would come up like this. Perfect example. Now, this is not the IB statistic. This is not the IB failure, but, use your imagination for the IB line and the price action. We come up, we don't get through it, we can't get anywhere, we come down, we test back up, still don't get anywhere, and we revert to the mean reversion. That's a mean reversion down here. That's an IB failure. IB continuation, just the other way. Boom, 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 and we can keep going. Okay. Couple reasons I'm thinking about the IB are a rotational day, and yesterday was a classic example, suggests an IB failure because we're not breaking out. We're mean reverting. We're balanced. We're rotational. The market is balanced. The market is rotational. If it's a directional day, we're breaking out. We're moving. That suggests the IB continuation. So vetting the IB trades, the two IB trades, gives you two trade options depending on the context, on the two different types of context. As opposed to if I were vetting just the mean reversion, I've only got one. I've only got rotational trading, mean reversion, outside in. That's only trades I can vet. And if it's directional, then I stand back and watch. So that's where we are now. Also, part of this process is when you are vetting a trade or have vetted a trade and are waiting for that to, to set up, nothing's a surprise. Like, I am watching the market, sure, and I'm narrating the market right now, and I'm taking in all this data. There's absolutely nothing I'm going to do until 9:30. Nothing. Because the statistic has not been set. There is no IB trade now. And let me just throw in a little caveat at this point. Something that I did very wrong previously was try to anticipate and trade to the statistic. Another reason, speaking of statistic, another reason that I am working on the IB trades is there is a greater than 97.5% probability that either the IB high or the IB low are exceeded by price in the balance of the RTH trading session. So that's pretty incredible statistic. And that's for all four open types. Currently, I know from yesterday and previous, in lower in range as we are today, it's 98%. Well, not a lot of statistics give you a 98% probability that they're going to happen. In this case, it's not as easy as it sounds because it can be the IB high or the IB low, and it can happen anytime within the next 6 hours, within, 6 hours after 9:30. So that, those are some caveats you need to be sure you understand. Back to the big mistake I made. Keeping that 98% probability in my mind, I'm thinking, ooh, that's a good idea. So at around, say, 25 after 9, and we're trading up here, I think, oh, we're going to take the IB high. And I would go long, for example. Bad idea. Very, very, very frequently, and I wish I had a statistic as to how frequently this will happen. You come up here and then boop, and go down and take out the other side. And guess who would get stopped out? Moi. So don't do that. Wait for the statistic to be set, whichever statistic you're working on or vetting, and then trade the statistic. That's advice from the old guy. Now, Rod, there are, a whole bunch of statistics. There's VPOC migrations. That's Antonio's favorite. There's mean reversion, like I said, outside in. There's VWAP mid to VPOC. There's a whole lot of different statistics that are more or less vetted and are referred to frequently in different, the TLab, for example, or static. But you need to vet them for yourself so that you have the confidence to trade them. And you know precisely how you're going to determine that. And I will say now, even after all this time with the IB trades, I have recognized, and I am disappointed in myself, I cannot specifically take a pen and paper and write down the trade, write down each step of the trade so that if you gave that to your son or daughter or close friend or whoever it is, they could look at your notes and trade that trade. And I will unfortunately have to admit that I recognize a couple of weeks ago, the final decision on these IB trades for me still is discretionary. It seems like my discretion, I've been jumping the right direction lately, but that's definitely not a good thing. And I've, sat long and hard with a blank sheet of paper and a pencil and tried to, it's real simple. I mean, okay, the IB, well, first it's not a statistic until 9:30. Price has to go up through the IB, and then what happens? Now the statistic has been hit. And now we have to determine if we're going to go long or if we're going to go short or if we're not going to go. And the idea is what is the specific criteria that confirms that entry and the trigger that does. for me, I know that I want to, like, for example, if this were after 9:30 and we come up here like this, that's not the statistic for me. It's got to go through there, through the line or the level. I prefer it to pull back down and retest back up and then watch what happens after the retest. But I have not been able to specifically identify when this happens and that happens, that's how many ticks, how many points, what, and then mechanically enter the trade. I am in awe of the quant guys who apparently can do that. Maybe I'm just don't think logically enough, or goddamn, I don't know, but it's pretty disappointing. And I'm standing here babbling, and you see that now the fact that I'm watching the entire session most of the day, I'm getting away from remembering to do my migrating VPOCs. The reason that's important is when I'm zoomed in like this, I can still see where the POC has been migrating to. What are we doing now? Well, we migrated down like crazy. We know that at the open. And now we're moving back up. Are we going to just enter back into a rotational day like we did yesterday? Highly likely. Unless some shock and awe happens to the market. Agent Orange declares war on Kansas. Who the hell, you know what I mean? Who the hell knows? It's a crazy time, that's for sure. So I think that pretty much brings everybody up to speed with where I am and what I'm thinking. I think. Oh, what I think I was going to say about Rod, maybe I did, maybe I forgot, but here we go again. He's a good trader, great trader, extremely profitable now. We all trade, chat back and forth with each other in Static, which is an app he's developed, basically like a journal on steroids, but it's not public, so I don't, I would certainly recommend it the moment it is public. Anyway, he also does a lot of statistics and vets his trades, and that's why he's profitable, extremely profitable. Like a month and a half ago or some month maybe not last month before, he posted just a calendar of his trades results. Actually on Static was over $43 or something $1,000 net profit in the month. One guy trading one account. So there you go. And not many trades, 3, 4, maybe max 5 trades a day. But anyway, I digress. He came up with a version of the IB statistic, which everyone refers to as the IB30, because it says that there's about a 90% probability. You'll notice that this is 9 o'clock. So here's the IB high for the first 30 minutes. The IB30 statistic says that there is about a 90% probability we will exceed the IB high or low, which we have just done, of the first 30 minutes in the second 30 minutes. And we just did that. That statistic has been satisfied. The reason I've been kind of thinking about that one is it narrows the time window. In other words, with the original IB statistic, you have 6 hours. You have from 9:30 in the morning until 1500, essentially. So 5.5, 6 hours. With the IB30, you've got 30 minutes. The thing that I haven't been able to identify yet, and will happen with homework, is there the follow through on the IB30? Because I have the 2-lot risk neutral trade package. So I am very conscious of the fact that not only do I need to get to my risk neutral scale, I want to get to the profit target, which is T2. And if there's not enough meat on the bone, I'm not going to bite, if you know what I mean. Maybe that's the wrong thinking. Remember, this is my virtual journal. I'm essentially talking to myself, and I'm thinking out loud. So there you go. Here's the IB30. If you went long, you're scaled. And then some, because we're up to 75, 76. But if you went long here at the IB, wherever it went, it was down here, remember, because the IB is not set yet. So the IB high and IB low continue to move. So you have to be on your toes as to when that happened, when the IB30 happened. And also remember that the IB30 can happen an infinite number of times between now and 9:30. Because every time it goes up through there, it's making a new high, higher than the previous 30 minutes. So, make sure you're aware of, if you're thinking that sounds like a good idea, make sure you're aware of all those things. My point was that if this was where we made the high, and this was the previous IB high, say 71, we got to get to 83 in order to have our second profit target. The overnight statistic, the overnight high and low, I kind of dozed off or went to sleep, or I don't know, maybe Mama walked by and was acting real sexified or something there. Let's just see what the overnight high and low is. The overnight high is 52.1% of the time. So get that in there quick. And why am I doing these things more or less in hindsight, pretty close? Because of the record. I may go back and look at this stream 2 years from now or something, or someone else may do. And I want it to be as accurate with the most correct data as I can. I think that's important. Also, let's notice over here that this is the micro composite VPOC, which was put in on the 17th. What other stats we got up here that I've been busy flapping my mouth and not paying attention to? 66.6 is the overnight low. Oh, we got mighty close there, huh? Look at that. Within a tick or two. So there's our previous RTH high and our IB high. Just taken out from yesterday. So we pretty much ticked off the first 5 or 6 statistics, every day. Like clockwork. And I'm not saying that this is anything that you should, just remember these are statistics. This represents the percentage of time that this level, actually this was the IB high, was revisited over a 2,000 trading day sample set where we opened lower end range. Could be a nuclear war. Trump could, suddenly take off his mask and be Hillary Clinton. I mean, anything can happen. The only 2 things that affect this statistic and the study is where we open this RTH session with relation to the previous RTH session close and the previous RTH session range. That's it. Fed rate, whatever, doesn't affect it. Of course, any of those kind of inputs to the auction that happened before the open would affect it because they would change where we were open with regard to yesterday's range. Today's range and today's levels will have an impact on tomorrow. There you go. And there you have it. Now let me see what kind of tomfoolery I need to get up to over here. I must have the wrong screen going or something. Nope. Okay. All right. I've explained the blue boy over here. This is just a visual tag for me to glance left and make sure that I've got the entire session in range. That's the session start. That's just a vertical line I slap on there. I try to keep the price scale at a point. So you already understand that within each one of these points, that each of these is $50 with a one lot on the ES. Within there are 4 ticks at $12.50 a piece. If you're and I really, really strongly recommend do not trade your P&L. Keep it out of sight. Don't think about it. These values up here will reflect, when in a trade, ticks. Now, obviously, average price is going to say the price. But these values here are all in ticks. And this will be 2 contracts and 1 contract and 0 contracts, and these will be in ticks. And I am relatively sure that I would have already been past the end of the XFAs if I had not been forced to go back and review the status of the accounts when there was a big data hiccup a couple 3 weeks ago at TopStep, and I needed to make sure that everything was straight. And at that, I had not reviewed them at all. And to be absolutely honest, I didn't realize that I was so close to the profit target. I was just focusing on the setup and the trade. And that's not BS. That's actually the truth. And I wish that hadn't happened. I wish I hadn't needed to know that or see that. Because now that's, in the back of my mind, ooh, only one more trade. Ooh, only one more trade, That's, and I'm talking to myself. Perhaps that is ultimate motivation and a good thing for you. But what else is going on here? Let's just take a zoom around the deal and see what's up. Who are these people? I don't think there's a million new experts over in the TLab, so it's funny how different people come and go there with, strong opinions and a lot of posting and whatnot. Somebody did something, I suppose. I don't know what. Okay. I don't see any fires or anything, so that's a good thing. Let's take a run around the roses here, shall we? Here's the micro composite. You see where we're dancing all over this micro composite VPOC right here. New all-time highs, irrational exuberance, to quote Greenspan. This is the market profile chart. Balanced, so far balanced. In market profile world, the thinking is a P-shaped profile, or really P-shaped profile, is the result of short covering. A B-shaped profile results from long liquidation. So we were short, long, short, long, and now we're up here going, ooh, what are we going to do now? I have no idea, but that's something to consider. This is the Renko. Yesterday was just basically flatline. This was retail soup is what I call it, because there is a buttload of traders that cannot resist clicking the mouse. If you're good at range trading, long, short, long, short, long, great for you. In a tight range and a balanced market, that's the way to trade that. That is the only way to trade it. Sure as hell, you don't want to look for longs. You don't want to look for breakouts. But I didn't, for the reasons that I told you, and it doesn't. I'll get back into my levels and meat on the bone here in a second, but you see the distribution under here is basically almost a perfect Gaussian distribution with a little bit of excess or taper at both ends, and the POC is pretty much in the middle. Now we're developing a situation where we've got two distributions, and we continue to extend the IB high upward. Not saying that means anything, that's just an observation. So, okay. We're green across the board now. Remember when we opened we were red, meaning what does that mean? That means we're above settlement. Settlement. Last price above settlement. 69 quarter, 73 quarter. You know, not very far, but we're above settlement. 4%, plus 4 tick change, or point change, I'm sorry, not ticks. And 0.0605% change positive. Light volume. Ooh, really light volume. Let's have a look at the volume story over here. Ooh, picking up. Good for them. They're up in the 80s now. Average at this time. Ooh, ATR is way out at 6 points. That's increased swinging. That's, you know, you need to be careful about that. If the ATR is 6 points and you're looking at 3 points, you could get hammered, right? I could get hammered. Let's put it that way. The big eye in the sky. Okay. Back to our charts we were just looking at. And then the bookie mappy. And because I'm just, you know, a whatever it is, ADC or whatever the hell, whichever alphabet soup it is that I suffer from. And here goes the VPOC migrations north. And I am still tracking the migrating VPOCs. My theory here, I don't think I did mention this, but anyway, I want to have all the information that I think is important to trade here on the hard right edge. Whether I'm scrolled way in, whether I'm out seeing the whole range, you know, the whole session so far, no matter what happens, I have all the data that I feel is important here on the hard right edge, which is where prices actually move in, as opposed to most internet folks who are all trading a rearview mirror. I mean, my daughter, who doesn't trade or has any interest in it, can look at this and go, well, yeah, you know, we tested right here. We didn't get any. We tested down through it. Here's an example of we tested down through it. We traded up. We came back. We didn't get through it. You go along. Boom, 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 boom. Oh, see, I'm a genius. Yeah, anybody can do that. That's one of the reasons why people who don't trade live and for the full session and, you know, have full accountability, I find less interesting. One of the worst, I think, rather than a person who never trades live or, you know, but maybe comments in the live market or, you know, but doesn't call trades, like Tom doesn't trade live or call trades, but he comments on the live market right now as it's happening. The guys that I find are even more insidious are the people that, you know, trade, and then they're, you know, they're down $1,000 or something in their stream. Well, it's the end of the stream now. And then the next morning you tune in and they're up $2,000. Well, wait a minute. What? Oh yeah, I got back on yesterday afternoon and I made that, I got that L back and then I'm up $2,000. Well, okay. I find that way more useless than somebody who doesn't trade live. And of course, the most useless, I guess, would be the people that never trade live and do just continually lie about their crap with in the rearview mirror, I guess. I don't know. I don't want to be any of those things. We are pushing out. We've got a couple of 3 little distributions here now. POC is moving higher. What does that mean? Well, remember the definition. The POC is nothing more than the price at which the most contracts have traded so far in the session. Here's the session volume profile. 4,964 contracts have traded at 74.5. The absolute split second that one of these other prices is 49.65, like this one, this will just come right back down here. It's just the price at which the most contracts have traded so far in the session. What does this mean? It means more contracts traded here than down here. More contracts traded up here than down here. More contracts traded up here than down here. What's that mean? That means that traders are able to find or happy with two-way trade at these increasingly higher prices. And then you can get into the old market profile stuff where you have value areas, we have overlapping value to higher, we have all that kind of thing. But just looking at it from a strict price point of view in the POC, for example, there you go. That's how the thinking goes. I'm not saying it's right or wrong. I'm saying that's the thinking. And I'm not vetting the IB or the VPOC or the MCVPOCs or the migrating volume points of control, which is a setup, as I mentioned. This one would actually have been a big one in the TLab, I'm pretty sure, because here we go. This is the mid. This is both VWAPs, and we had a VPOC migration. Well, that would suggest definitely a long. But look what's happening. So now we see that. Here we see it again. This is hindsight, real easy to see. Okay, yeah, it migrated. We tested down. We came up. We couldn't get as low. And then we went up. Okay. Tell me what's going to happen right now. Tell me what's going to happen it's 9:22. Tell me what's going to happen at 9:20. Where are we going to be at 9:25? This is the hard right edge. This is trading. This is rearview mirror BS, in my opinion. And remember, this is me talking to myself here. So I'm trying to make sure I don't fall in those holes. And I'm being open with the fact that I have not successfully figured out what criteria I would use to validate the migrating VPOC trade, for example. Or in my specific case now, the IBs. And remember that the IBs have not set yet, nor will they for another 7.5 minutes. So I'm free to look at these other things and talk about them. These are stops, icebergs. I don't have a lot of stuff on my charts. Again, anything that you do, any system you use, any charting package you use, any configuration of that charting that you use that produces consistent profitability, do not under any circumstances change that based on what somebody tells you. This makes sense to me. Tom B., if you happen to cruise through the Traders Lab, if he posts a screen snap, he's got so many lines and bubbles and the real intense coloring and everything of these levels. I can't even see price. Works great for him. And he inspires a lot of people. Good for him. Absolutely, that's great. I find all of that confusing and not helpful to me. I have these price levels, these bubbles, I don't even have the 3D part turned on. I figure that'll save some computing power, even though this is supposed to be, when I built this, I built my own trade computers, and it's supposed to be the latest and greatest thing at the time, a 3 years ago. I think my big mistake was going to Intel instead of AMD, but which I had to use. But anyway, back to this. These bubbles are delta, meaning that if it's positive, which the lighter greenish thing is. That means it was positive buy delta, and this is sell delta. These are resting liquidity. I don't see any huge levels to point out to you. We have 500 guy drops in and out of here from time to time. Here's 142 contracts at 85. You would suspect that to be a strike, or I would. And there's the liquidity about that level. And it came into the book around 9:08, and it kind of lightened up, and now they've added a little bit more to it. That's how I use and how I have my stuff set up. Everybody's different. Some people have 1,000 VWAPs on their thing. VWAP Jesus has got so many VWAP lines going around on his chart. I can't make head or tail of it. He's successful as heck, and a really nice person, and good for him. That's the important part. Good for him. And here we stand. 4 minutes. What's going on now? Well, I don't see anything with random risk, which is pretty scary to me. I consider here we go, at 12 o'clock, he's going to sign something. We're going to have a press briefing. I guess the European leaders and Zelensky have left. I don't know. Anytime these fellows in the administration, or these folks in the administration, some of which are much more affectionate towards the sound of their own voice and definitely like the camera, anytime they get near one of them, I find that to be an unmitigated or a random risk. How can you can't plan for that because it's not scheduled, it's not on the docket, you don't know. Any project manager will tell you the first thing you got to do after you've set up your project and your allocated resources is to identify and mitigate risk. Well, there's no way to mitigate or to identify it, so I call it random risk because you don't know. I'm not saying anything wrong with the fact that Trump talks and she does and whoever else it is. I'm just saying that how do we as traders mitigate that and keep calm, rational view on it? We can't. I can tell you when non-farm payroll is going to come out, assuming that the new guy puts out the number, which we have done in America every year since 1905, but this guy says he doesn't think maybe he's going to quit that. But anyway, I can tell you when non-farm payroll is, like PPI, CPI. I can tell you when any of these numbers are going to be released and at what time. Well, that gives you the opportunity to mitigate your engagement with the market and your risk. Something's happening right here. We are not at 9:30 yet, but something's going on here, and I don't know what. Therefore, I refer to it as random risk. So if you hear me use the term, you know what I'm talking about. Back down again. What have we done? Boop, 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 boop. Uh-oh, guess what? This is greater than this one. Yeah, there you go. That's why it moved, right? This was 49.64. This is 50.72. What did we do? POC down there. Price at which the most contracts are traded. Nothing more magical than that. Again, we put in we elevate the IB high a little further at 9 o'clock. Test it again. Nothing's happening. Coming back down. The statistic is not set, but it will be here in pretty quick. 15 seconds. And now, boom, 22 seconds past 9:30. The IB statistic is set. The IB high will not move anymore, nor will the IB low. The statistic says that greater than 98% of the time, this one or this one will be exceeded by price in the balance of the RTH trading session between now and actually 1600. But the stream goes off and I shut things down and I stop thinking about it at 1500, which is cash close. The futures market actually trades through the curb trade of an additional 15 minutes, but I'm not going there at this point. Now I have to ask myself, first of all, there is the 11th commandment, thou shalt not diddle in the middle. The POC is by definition the middle. I mean, it's not the mid, but it's the mean. It's the center of the it is the most traded price. Consequently, it's the most likely to be traded some more. And that's an old expression, don't diddle in the middle. In my trading, I have the range requirement, which used to be a hard fact or hard point in my trade plan, but I've made it more of a discretionary one, but certainly to be aware of. I referred to it a little bit ago, but the range requirement says that in order for, let's say all things line up to validate an entry, the final cut could be the range requirement, which says that I must have an unobstructed path to my risk neutral scale. 3 points, in other words. 71, 75. So if I was going to, for whatever reason, go trade this way, yeah, right there, there's room. Right here, not room. Right here down, not room. Lots of levels. Every one of these levels is a price, is an area or a location where price can react, and look what happened right there. We come down here, boop, reacts, goes back up here, boop, comes back down here. Perfect example, a perfect illustration of it. So in a tight market, a mean reverting kind of a market, that's a real ever-present thing in my head. And now my thinking has expanded a bit with regard to that. Do I believe there's a reasonable probability that I'm going to act? Okay, risk neutral is great. Once you've hit the risk neutral target, you put your helmet on, you get in the hammock, and you watch what happens. But the goal is not to just be risk neutral and have scratches. The goal is to get to the profit target. So do I think that there's a reasonable expectation of that? And that is to get to my first risk, or my second profit, or the first profit target. In the case of my risk neutral trade setup, it's T2, second target, because T1 is the risk neutral scale. I need 12 points. That's 48 ticks. Yesterday the whole damn session wasn't 48 ticks. I mean, really, from the middle out even. So, and I don't know where we are here at the moment, to be honest with you. So we're at 55 to 76. 20 handles. No problem. And we're sort of directional. Now, one of the reasons lately that I haven't taken that trade that would have put me over the milestone, but I've narrated it and pointed it out each and every day. As I said when I was describing the IB trades, typically the IB failure, which is a mean reversion, is suggested by a rotational day, as we had. Let's look over here. a rotational day as we had yesterday, where an IB continuation trade is typically suggested by a directional day. We have more of a directional day today now. The last couple of weeks, I didn't get, I didn't enter a trade, overtrade, and therefore get stopped out and take losses because I was cognizant of this, and it made me hesitant to until I understood it, to enter or to trade. Seemed like we would have a suggestive, for example, today would suggest an IB continuation. And then shortly after 9:30, the context would sort of change. And the successful trade several times within the last 3 weeks has proven to be the opposite of the trade that was suggested early on. In other words, we were in a rotational day, and then all of a sudden we'd start going directional after 9:30, and turns out that the IB continuation was the bell winner. Was there, rang the bell? Went on and on and on. So that's something that I don't know how to identify and mitigate for, or work into my plan. Another, when recognizing when the steamer turns, when the tanker turns, how do I recognize that and adjust my thinking from mean reversion to continuation? Anybody have an idea? Slap something in the chat, please. Okay. And it's not like the market is waiting for something. Well, I mean, maybe it is, but I don't know what that something is. These ledges like this, I immediately back off. I don't know how to deal with them. I don't know how to trade those things. Oftentimes I think, when we fall into that ledge, we're going to trade X direction. And then what'll happen is we'll fall into the ledge, and for some reason it'll go back the other way. So I don't know whether these act like a support or a resistance or what. And I don't like them. Yeah, see, here we go with the damn ledge thing. Now we are... No, wait a minute. We have not taken out the statistic, and as I have pointed out 1,000,000 times before, it's a big no-no for me to trade to the statistic. If you're successful doing that, Merry Christmas. For example, okay, we're under the POC, we're under the mid, we're under both VWAPs, we've come under the gap, we're coming off the high, I think we're going to head for I think we'll take the IB low. No, not for me. I can't tell you the number of times I've had that one shoved in my eye. The IB trade says after the statistic you have 2 ways to go. And so that's what I'm doing. And after the vetting is over with, then you add that to your playbook and you can add another trade. So perhaps the next one I do as an example could be the VPOC migration. Then I would have the VPOC migrations and I would have the IB stats trades. You know, that's how I understand it, or that's how I understand this. The way to approach it properly is to approach trading as a business. And it's the business model, you know, not to beat the dead horse, but it is the business model of a casino. It's exactly the business model of a casino. They are in the probabilities business. They don't gamble at all. They know that they identify an edge on any game or an expectancy. They identify specific rules, and then they put the game on the casino floor. And their only mission is to play that game as many times as they can, knowing that the law of large numbers, you know, the more trials you get, the more that edge amplifies to your bank account. They know there'll be losers, or the gamblers will win. We know that we'll take stops. They don't run it when a gambler wins. They don't zoom over and shoot the dealer and change all the rules. You know, they just say, hey, good luck, congratulations, Screedle, and here's a drink, and then they deal the next hand. Because they know that it is not their life, and their future doesn't hang on the next trade, which is one of the real downfalls of most retail traders. I got to win this next trade. It's over a sample size of a number of trials, statistically significant, bare minimum 50 to 100. If you've got a win rate, and by the way, win rate is the most overquoted, useless thing. That is complete YouTube clickbait. Be real careful about the win rate story. When taken in context with the other metrics, it's part of the expectancy function, or formula. But to say you got a 90% win rate and everybody goes ooh ah, and runs after you, complete crap. I can have a 90% win rate and go broke. If every time I win of those 90% of the time I win $100, and every time I lose $1,000. You know, it's risk reward. Now we've taken the statistic. We've come down and taken the overnight or the IB low. So the statistic has been satisfied. Substantial amount of selling here, and I don't know why. I am assuming somebody said something. Otherwise, why would the price react like that? Maybe it's the world famous ledge that I don't understand. And what's happening now? We've traded through it, back up, didn't get anywhere. Sellers hit in here and didn't get any further. My hesitancy is these two levels, range, right? There's 55 and there's 56. and this little fractal right here, and this low volume node. Is this a environment that one would expect a VPOC or a mean reversion or a continuation? I don't know. And if I don't know, I'm not going to put money at risk in this environment. I'm also thinking in the back of my mind, this story with TopStep, I'm wondering if it would be a big disadvantage if I take a trade today with the 3 accounts that are pulling through to Rhythmic, and then when whoever the wizard is that's going to look at this and determine whether that was the right or wrong thing for them to do. Yeah, I said, well, you traded these 3, so that's okay. Now we'll just leave those alone. You can keep with these 3. You know what I mean? Rather than the point of, well, I'm not taking any trades until I have a ruling on this because I have paid for and traded dutifully and responsibly and successfully all of those 5 accounts. I'll just, be right up front with the thinking. And here we go again. This is more in line with my idea of context and a trigger. But having said that, as I said before, what are we doing? Well, we're trading down. We got a lot of liquidity living just below us down here. And this is and a low volume node. This is an interesting thing, an interesting question that I don't know the answer to, and I think about it daily. If anybody else does, say something. Liquidity oftentimes can be, in this case, support. The other half of the world says, no, that's a magnet. That's pulling price to it. The converse would be, it's the lid on the pot. No, it's a magnet pulling price up. Beats the hell out of me. That's the random nature of the market, I guess. And now, as I do every day, let's pretend that I took the signal here, the trigger, or this trigger. So 54.75, say I got 55s, right? I need to get to 58s for the scale. Not there yet. Close, but no cigar yet. And here we are at the previous RTH low. Here we are at the MCVPOC from early on sometime today. See the advantage of the flags. You can be zoomed in, but you can still see where you were. Whatever this guy was. The overnight low. And it looks to me like we're going to break through it and fall out of bed. Just a random thought. And here we go with this liquidity apparently providing support. Not anymore. Now they traded through. Now that liquidity traded out, we got 298 stops out right here. There was a 375 contract iceberg. So a long would have been kind of disappointing. Huh? Let's say that long at 55, and it's now 51, so you're thoroughly stopped out without making the scale. Now we're going to come up to the IB low from the bottom. So do I think that we're going to start looking at an IB continuation? I bet you if I know. No, this is the current RTH low. The Globex low. Overnight low. And we didn't get through the IB low on the retest back up. Again, 64, let's call it 64. I'm not quick enough, so I got 64s. I would need 51s for the scale. Right now you're sweating bullets. I would be. And I have no, other than this drama with the account thing, I have no, and you know, the increasing need to be consistently successful because of, you know, it's now my income rather than before. I don't have a problem not taking a trade in an environment that I don't feel suggests that I should. There's 3 positions, right? Long, short, and flat. Spend a lot of time flat. I spend probably way more so than I should, because I do think I suffer from paralysis by analysis quite a bit. We need to get down here. Let's say we got short. We need to get down here. If we got long, where we talked about it, you're stopped out. And now in order to get our scale off, we got to get down here. Meaning then that we're looking for a breakout in order to get past our scale. Don't really have any levels below us. See what we have for naked volume points of control here. No. Here we are. Here's today, right? POC and these red lines are naked volume points of control from the previous auction. Yeah, well, this is not anything that I'm keen to involve myself with. And I'll tell you, that's nerve-wracking right there. That kind of consolidation at the bottom, assuming you were betting and, you know, playing the IB continuation, which the day would suggest because it's looking directional here. And may work out beautifully. I'm not saying that it won't, but I'm saying from my point of view, that's, you know, blood pressure is a gazillion over a million at this point. Now it's going to get up here and stop somebody out, not me. But if, you know, had we taken this entry at 54, we're within a half a point of being stopped out right there. On the news front, what do we have? Oh, something else I didn't do, I don't think. Did I do? No, I didn't do that. Boo. Boo is boo. Okay, on the news front. Oh, here we go. Yeah, so there you go. What they're gonna do is they're gonna fool around here, and the Fed is gonna go, no, inflation's heating up. The entire market is hanging on 100. Well, they were 100% betting 100% on the rate cut in September. Now it's dropped down to about 89 or something like that yesterday, but they're going to mess around here and we're going to have inflation and the Fed's going to go, no, actually it's not warranted. And then you watch this thing drop like a hot rock, boy. Oh, the Atlanta GDP index is looking better. We're in the green zone. And, you know, they're all fly fishing in Jackson, so I think what's the date? Only Tuesday. Okay, no, nothing. I think the Fed, well, we can look at that. Let's look here. Let's not suppose. Let's look. What's going on? Let's look at the calendar for this week. Well, I guess Fed Chair Powell on Friday at 9 is going to be the watershed moment for the week. I thought there was more. Well, we've got, you know, we do have PMI and inflation numbers and you know, talking Feds till the cows come home all week long. But I thought Powell, I thought there was a decision out. There's the balance sheet. This is something about the symposium. This speech right here is going to be the real bell ringer, I guess. I think this is just, you know, CNBC or some horseshit where they sit around and they get to fly out to Jackson, and like when they go to the G7 or whatever, and set up their little desks and are able to enjoy the area. Well, okay, so Friday's going to be the biggie. Unless something happens geopolitically. I can't imagine anything will happen with this Ukraine story with that's, you know, Putin's got the bat and the ball, and he doesn't give a shit till the last, you know, that he'll fight the war till the last Russian's dead. He doesn't care. And what he thinks he's going to get out of that, I don't know, but I don't really understand the whole dynamic, so I won't talk about it much. So, yeah. If we shorted here, 54, 57.75, that's very likely a stop out right there. And think about that. If you just look back here at the day, anywhere along here, if you got in and you're using a 3-point stop, as am I, where's your stop going to be? Just look behind you, look left. Right in the middle of all this consolidation liquidity, right in the middle of this mess right here. That's important to keep your head around, I think. My head around. Sorry. What is the overall context now looking like? Kind of looks south, doesn't it? We've been south for a while here. Now we're falling out. Got through this liquidity. So, you know. And in the rearview mirror, it's real clear that you took out these stops up here and you came down, tested up, and you went south again. But that's just rearview mirror trading. That's not what I did, and that's not what I even recognized and narrated about. And it's going to continue to run, and that would be 12 ticks, 12 points. We're approaching there. But that's BS. That's rearview mirror trading. And I refuse to do that. To look back and analyze the market and what you may or may not have seen and recognized, that's one thing. But to talk about, oh yeah, I saw this and I did that, that's rearview mirror stuff, and that's no good in my opinion. And now we're, trading, we're falling out of bed, and there's our targets. Would have been, you'd be a real star. I'd have been a real star right here. Not quite yet. There's not quite the target. Say I got 54s out of it. Or say I got 54s out of it. I need to get to 242. There now, but pretty close to the T2 target. And here comes that low volume node. This is a previous all-time high. Yeah, they're falling out hard now. I don't know what may have been said to precipitate that, if anything. I don't see anything here. But I certainly wouldn't doubt it. Shucks, huh? That's disappointing. I could have enjoyed that one. The actual trade and triggers were here at the previous low. If you look at it, I mean, if you want to, we consolidated, breakout, retest, sell off. All of this is rearview mirror commentary, of course. I mean, that's the beauty of the stream. It's very obvious by just going back a little and listening that I didn't say that, 20 minutes ago, 15 minutes ago. And I'm not pretending that I did. I would really like to see that reaction from them so that I really wonder what to think about that. Got any suggestions on something to do in lieu of TopStep there, Antonio? I think it's real stupid if you cannot or have not for some period of time traded consistently profitably or been consistently profitable in a evaluation account or whatever, to think that you're going to put your own money at risk in a brokerage account and be profitable, in my opinion. And maybe there's two sides to that coin. Some people say, oh, very definitely, it makes a big difference. I don't know. That's an option. I don't know of any other, unfortunately, I've never really looked around much. I don't know of any other prop situations that have what I feel to be, the same credibility and reasonable rules. This, every time I think about that, trailing drawdown based on unrealized intraday swing, that's got to be the stupidest thing. Why anybody would go for that, I have no idea. But that's the thing that's been adopted by a few people, a few of these outfits. I don't know. I'm pretty disappointed about it, I can tell you that right now. And here's a V reversal. Now, Rod and company and Static have been working on stats for this V reversal, which is essentially, in this case, picking a bottom, which isn't very recommended. I don't have anything that's going to manifest here at any point because the IBs are up here. So yeah. Have you gotten any of your accounts to the XFA thing, or the reason I was doing that and was doing this 5-account copy trade thing, which I used to think was just complete BS. Somebody pointed out, well, why? If you trade just like one account and it magically copies to 4 others, and in the XFA you can get paid for each one of those, what's the matter with you? Was his comment. And I thought about it, and it was completely right, I think. For example, my one risk neutral 2-lot trade, which is the package that's set up now, with both targets is 60 ticks. Well, that's all of a sudden, instantly, without even thinking about it, that's 300 ticks. In dollars, instead of $750, that's $3,750. And in the XFA, you get paid on each one of those accounts. You can, after the 5 days or whatever it is, you can withdraw 5 days now, money. So maybe I'm just a chicken shit, really, and that's the problem. But yeah, before I've always opened, had a brokerage account, and some went well and some didn't. But then I came over here and I started thinking, well, this was the correct approach to do. After they finally dropped a bunch of rules and, would pay on the XFAs and all those kind of things. One of the rules at TopStep that I heard someone mention and that I would need to go verify again, after you're funded, you can't request a payment until you have 30 profitable days. 30. Now, to me, that seems like forcing traders to trade rather than encouraging, proper risk management. But those guys don't ever talk about trading in probabilities or setups or any of that stuff. I don't think. I've never heard anybody over there talk about that I picked up on. Dakota makes comments about you got to follow your process and all this stuff, but they're all it's under the 20 EMA and these kind of things, a lot of them. So I'm not saying there's not somebody there that doesn't trade probabilities, but they don't talk about it much. So I really don't know what to do, and I'm running out of time to do something here. I got to either fish or cut bait. This has got to come right, or I'm going to shut everything down and, start doing something else. My family has this unfortunate habit of liking to eat. The company being sold and all of us being magically out of a career wasn't something I planned on, or something that was definitely a wrinkle in the road, that's for sure. And then we got the, Agent Orange and the Random Risk Band performing on stage live for the next 3.5 years. What the hell it is, that's just overpowering also. Overwhelming, I should say. A lot of moving parts over here, Antonio. Thank your lucky stars. It is cool today. I'll give it up. It's 25. That's different. I've changed my attitude about hurricanes. I used to be monitor every day, every week, and now all kinds of things. You know, I do still have all the stuff generator and everything that I got in case the last one was going to come. But this year, all stressed out and worried. This year, I've decided I'm not going to even pay attention to it until I start hearing something about it. And I have specifically not looked at the weather. Trying to keep my mind calm and focus on this. Too easily distracted, I think. I hope you got short there, my brother. I hope somebody did. I wish that somebody was me, but I guess it would have been here. Would have been the trigger. You know, again, rearview mirror, look back, let's do this. And why would this be a more likely trigger or on the hard right edge than this? Or than this? It wouldn't. It is the likely trigger when you're looking in the rearview mirror because this happens after here. So that's why I go, oh yeah, look at there. There's the trigger. That's bullshit. That's rearview mirror. What's the difference right there? Or right there. That looks like it's going south, doesn't it? That's the joy of trading, huh? And any one of these would have been stopped out. Full stop. Let's see here. 64. Well, if you were really Johnny on the spot with the entry here or here, it's conceivable that you're scaled. And if once that's happened, then okay, great. You get taken out up here, but it's a scratch. And up here, but it's a scratch. Bummer. You took the IB failure. Uh-huh. Over where? Over here? One of these, eh? Or at what time of day, more or less? Or here, perhaps. Yeah, because very good point. There was that's the whole thing with trading. If you stop and think about it, you can make two sides of the coin every time. And that's why I'm really stumbling with around with specific the specific criteria. Like I was saying earlier in the stream, if take out a pencil and paper and see if you can just write down. Obviously, the IB statistic is falling off. Who can't see that? It's like the VPOC migration. And then what are you going to do? Now, then write. How are you going to define your context, or how are you going to define your trigger, etc., so that if you mail it over to me, I can trade it, or my daughter, or my wife, or vice versa, and I can't get there. I'm not, and I hear these people throwing the I vetted trades around pretty loosely, and I always question: did you really vet that? And I've asked several times in places like the TLab. Could you post the where's the data for that? What's your sample size? 5 trades or 100? What's the specific criteria that you use? And I'm not trying to do it to be mean or call somebody out. I genuinely want to know how they did it. A young fella in Static, who's also in TLab, I think. posted a YouTube thing about how he vets a trade with he uses the Sierra chart, and his trade was the VPOC migration, and he enters according to his, listening to him. He enters. Now, none of these trades were live. This was all scrolling back and looking at like this. Okay, VPOC migration south. Well, I entered right here. Did I get my 3-point scale? Did I get my 3-point stop? What happened? Just by looking at the chart, and he has Sierra chart has a real simple measuring tool, so you can just take what would have been your entry and pull up a line and know exactly how many points. It's real simple to see what 3 points is. And he's, has come up with some data that says that's a valid thing. Well, I don't think you and I would argue with each other very much that if you just suddenly enter every time the VPOC makes a migration, you're going to get your ass handed to you a great percentage of the time. And I tried to do what he did, and I couldn't come up with the same idea, the same result. So I don't know. I'm not saying he's fudging something. I'm just saying there's a big piece of the puzzle I don't understand, I guess. Oh, good for you. That's great. Well, yeah. Super. I'm happy I'm happy that wasn't a, the family will be able to eat tonight. Those sim bucks are, it's pretty easy to throw them around. That Greg guy, that KGA or whatever, he's kiloton over on he doesn't come here anymore much because there's not enough action, but which is great. Okay, fine. Yeah, he trades this, I see posts of him in the ETH, and he's made 15 trades. And good, if that's the way he likes to do it. I don't know that according to him, he's passed a lot of evaluations easily and has blown up, I think he told me 11 XFAs. Can't keep them, and it's because he just refuses to overtrade and be patient. Refuses not to overtrade and be patient, and that's okay. If that's the way he wants to go, it's his job. That's up to him. Nice guy. That strikes me as a nice guy, though. He's worked in a hospital, and I suppose he's not, up against it financially. He's a respiratory therapist and has worked in the same hospital for 33 years. So I'm sure quite a, stable and secure income, and that's really great for him. Maybe this is just a, emotional release or something. I don't know. Because I'm sure that's a pretty tense environment. Nice guy. Seems like a nice guy, though. He's asked to have a couple of, voice conversations on my Discord there. Interesting guy. Kentucky. Lives in Kentucky. Beautiful part of America. I've never lived there, but pictures and stuff are beautiful. Yeah, so having all of that gossip out of the way, just for lack of anything better to say or think or do, we're at a point high, and have the whole context in range, and this was the big drop, and of course, in hindsight, magnificent. I wasn't there. And as Antonio pointed out, basically it was, the IB would have suggested up here, it would have suggested that we would mean revert, pretty much. It is a little bit of a, it's a judgment call. Is this rotational? Because where were we? There's where we took the stat, right? Yes. is that rotational or directional? That's what I was saying a minute ago. See, several times last few days or weeks, the one way has not been the right way. The suggested way didn't turn out to be the most profitable direction to trade. So here you are. What are you going to do? There's the V bottom. Took the stat. 1 test, 2 tests. Yeah, I guess. I'm gonna grab some tea. So get your trading spurs on. I'm gonna leave for a minute. Pulled up here developing value area low and tested that and pulling back the other way. So I'm sure that some folks, DTN or maybe Garrett or Lefty, have gotten short here. Hopefully that they're making way. One of the things that gal at TopStep said yesterday when I pointed out the whole thing and showed her the steps, she said, "Oh yeah, well you didn't break any rules. They're in good standing. They're still in." If you go to those 2 different accounts or combines on my dashboard right now, they still reflect the exact same thing. 28 or 9 or 5 or something, 100 profit, consistency rule good, no rules broken, any of that stuff. She said, "Oh yeah, well I see your point." Well, what we can do is you can buy 2 or whatever. I guess she said you can buy 2 TopStep X combines and we'll transfer that value over there. And I said, "No, God, no, thank you. It's not the game. That's not how it works. You know, I entered into a contract with TopStep. I've not broken that contract, and all of a sudden TopStep is trying to change the rules and the goalpost in the middle of the game, to use a sports analogy, and which your boss Michael Patak loves. So tell him that one, you know." And she said, "Yeah, I agree with you. You didn't do anything wrong, and there is that's not correct." So we'll see what happened. I'm disappointed at this point, obviously, but and if I had an alternate solution, even though I've got so much time and money invested in this, I would definitely at least open up that alternate solution with something, you know, with a test, with 1 test or something, and see what happens. But man, the thought of starting completely over somewhere is just goddamn depressing, as you might imagine. And it is to me, especially at this point in my life. and in view of recent circumstances. Pretty disappointing. The fastest solution to no BS and profitability and payments, withdrawals, whatever, is fund an account with a broker. But then that's assuming completely that I would trade successfully, consistently, profitably. Or profitably and, be consistently profitable. Jesus, I can't talk. So that's, and I think that might be the wrong approach, like I was saying earlier. I don't know. I don't know what to think, actually. I know what Rod and company would all advise, but that's easy to do when you got a big pile of money in the bank, right? Anyway, we'll see what happens here as time goes on. Okay. Tom time approaches here. Bottom of the hour. We'll be into the RTH2 pretty quick, another 15 or so minutes. I don't know what's going on. I haven't even looked at the other places here. Pinto, Genzi, Sorensen. How many millions of dollars has Rod made? Has Rod made today? A lot, actually. Well, let's see. 52. So Rod's made 16 points on 4 contracts with one trade here so far. And it's that test up to the developing value area low that we were talking about a minute ago. Let's see here. I don't guess it's a problem. I should have to ask him, I guess, but I don't think he'd have a problem doing that. So here you go. There's the entry. That's basically 68. And there's the target at 52. Heat, but didn't quite take the stop. Didn't move the stop, but didn't take it. And that's how you make money. What is that? Let's just see. So that's, what is that? 52 to 68 is 16 points. Oh, I don't want to do that. I want to do this. So $3,200. Nice trade. Nice trade, no heat, no muss, no fuss. Boom. Cool, huh? That's inspiring for me. Little disappointing, of course, but pretty inspiring. That's great. And as we all know here, anybody in earshot, that's the thing about trading. It's, it's like a gal with big boobs. It's it's seductive, right? And if you're on the right side of it, it's so clean and hassle-free, and what a pleasure. If you are not aligned with it and struggling, or for whatever reason the gods are not smiling, it can be a real terrible experience. I mean, not terrible experience, but a real stressful experience. So essentially what he did was right here, I guess, eh? Or something like that. No. Maybe over here. And here we go. Here. So he got short here. Doesn't scale anymore. After a year or two of doing that, he worked out that it was making him frustrated, giving half of his profit away at 3 points. So he's concluded that he is confident enough in his own trading ability to take only A-plus setups. And he then elected not to do the risk-neutral scale anymore. Very rigidly, very strictly with the stops remain. Stop remains in place. But then is moved both the target for both contracts or the package size to one profit target, which he adjusts basic to visual targets or lows or whatever levels in the market. You can do that, and that's the correct way to trade, to adjust your runner to to some level that you would expect to have reached. You cannot do that when you're vetting the trade, because if you change either the scale or the T1 or the T2, then that particular trade or trial cannot be included in your data set because it is not the same. So that's why I put it on and I don't touch them. All right. What's going on here? What are you doing? Take care, Antonio. Have a good one. Have a good stream over there. One of these days I have to drop back in there, or can't listen to that and do this at the same time. So I guess I probably won't, but I'm assuming they're still relatively consistent as they were. So good for you. Have a good one. We just continue here, watching the market. Okay. Now what happened? The NASDAQ actually would have been a more opportune and perhaps a bit more intuitive trade here. That's, snake charming is not, this is not the time to jump into snake charming, but if you look at it, didn't have the big up push, sold straight off, had a perfect, something that I need to figure out, or that I want to try to figure out, so many things to do with this. If you weren't looking at Bookmap at all, how would you trade this? And something that I always forget to do here, the IB, when we made the IB statistic, okay? That's clearly what happened. And there's the open. Watching this Renko form to see if there was a tradable signal that I could understand here, or trigger that I could understand here for the short. This is easier because it's, there's the stat. We trade back up just to it, and then off we go. But if you see what I mean, that's something that I have to look at away from the trading hour day during the study period at night. I need to try to. The problem with this is I'm not sure exactly how this bar forms, so I need to watch this one, for example. Does it trade up here? It obviously traded up here. And how does it end up like this? What I understand, what I believe to be the case with Renkos is that it's a 12-tick Renko. So it's going to do up and down and up and down and up and down and up and down until it gets to 12 ticks. Directional. Then it's going to set and move to the next one. Like over here. So I'm going to keep an eye on that right now. I'm not saying I know how to do this, but and for some reason I always think about it after the fact because I'm too screwed into the book map and the stream here trying to figure out and get a trade out. So now we're up. I guess that if we traded up to capture 12 ticks, I don't know. I've got to say I don't know. That's probably sounds pretty stupid if you're listening here, but at least I'm honest. And I'll refresh my earlier comments here. This is my personal journal, my virtual journal. The narration or my talking, my voiceover is me thinking out loud. So that when I review the streams, I can obviously see what I'm looking at on the video. But the only insight to what I was thinking is this voiceover. So I'm essentially talking to myself here. And if I was, why in the world would I want to bullshit myself? That's ridiculous. So that's why honesty is not even an issue. That's the purpose for transparency and accountability. If somebody else wants to question it or whatever, that's okay, but it's for me. I don't mean that, in a nasty sense, but it is, this is my virtual journal and I openly share it in hopes that it would help someone else or that they would go, to hear you do everything that the opposite of that guy, you know what I mean? Whatever it is. But, and then I would further hope that people, you mash a thumbs up and a subscribe, of course, and then join the chat and, with any kind of comments. You see the comments and the dialogue back and forth between Antonio or Richard and I and whoever. Okie dokie. What are we doing here? What are we doing here? Well, that was almost an IB continuation up here. Didn't quite get there, but the overnight low statistic, and I believe there is one, that seems to be working out pretty special today. Okay, let's loop the loop, shall we? Micro composite or the high time frame. You can see what we're doing. Yesterday was a monumental nothing burger. They're not sure what to do right over here. They're still, I suppose they're still, on pins and needles for the Fed decision. Here we are on the ES. These are the minis, by the way. ES, NQ, ES market profile. We are short, meaning that we're red. We're at a negative territory because we're under settlement. Pretty obviously, 20 handles now plus. Well, volume is picking up a tad. Short across the board, actually. 0.41% in that ES. Let's see what's going on over here in the Volumeville. Oh, look at here, 105%. That's a big bump for this time of day. And ATR has come down off a little bit off. Wow, look, we were clear up here, and now we're down on the sixes. That's a lot. Okay. And here we are. Back in the bookie mappy. My workflow, again, is to, just so people understand, this blue line is just a vertical line I throw in on the market at the session start. Strictly just an eye aid for me. I can glance left. If I see that blue line, I know that I've got the whole session in view. If I don't, I need to do something. I've got it at 1 point high on the price, meaning each one of these is a point. And then there's 4 ticks, obviously. And here we are. Well, now what's going on here? We're going to get a new low, low, low. How low can they go? I'll be so glad when this vetting process is over with, frankly, because these are obvious trades, right? You know, test up here to the previous low and come back down and get a trigger and away you go. That could have been an IB continuation too, mind you. Also, I've already talked about that, but of course, this is rear view mirror trading, rear view mirror analysis. One of the reasons I don't get much benefit from that. Anybody can do it, in my opinion. Now, what do we got? Double bottom. Ooh, we're going to turn around and go up? You never know. One thing I know for sure. We are now in RTH2. Take the 107 minutes in the RTH session, divide them by 3, and that gets you RTH 1, 2, 3. And that is a grouping that I think Rod cooked up, which I like a lot, just to aid in grouping the trades. You know, as you're doing statistics in your analysis, is that morning period more profitable, or is the lunch period more of a lot, consistent losers? You know what I mean? Any kind of thing like that you can approach the market with is a good thing, is a good tool, in my opinion. What is all this? It just didn't work. I don't know why. No lags here. This is kind of a handy feature in IRT. It'll tell you in milliseconds what the data lag is being processed into the into the system. It's quite a professional tool, I believe. And that's, I guess, probably why a lot of these outfits don't like these things. Well, the trades I'm currently vetting are the IB, the initial balance trades. Just to recap for newer viewers here today. Smack the thumbs up and subscribe would be great. Help the stream. get more people, tell that algorithm, if that's really a thing, I guess, to push this around and we get some people in here and up the conversation. What I'm doing is I'm vetting these two trades, which is the way to approach trading as a statistical, consistently profitable business rather than a video game or gambling or whatever. And I've talked about that ad nauseum here today, so scroll back. And after the stream is over, first of all, the stream starts every day at 8 o'clock in the morning, Central Standard Time. Pre-market setup, analysis of the overnight, what I expect is going to happen, look at the numbers and the upcoming events, news events. And then we have the open and away we go for the day. And the stream closes at, nonstop through the day, and the stream closes at 1500 each afternoon. Provides 100% transparency and accountability. And it is my virtual journal. Of course, the usual, it's not for trade or financial advice. That's obvious. Talking to myself here. We have a micro composite VPOC below us. By the way, this was the all-time high put in during the RTH session on the 29th. This was an interesting turn of events. We kind of had a leapfrog thing going between ETH and RTH. They were leaping over each other, making all-time highs. Ridiculous. My trading, as indicated by the name of the stream, actually risk neutral trading, that's what I do. And that is done through a risk neutral trading package, multi-brackets. And this is it. This is the minimum size package. If you wanted to get less risk than this, you need to go to a micro. It's real simple. There has to be, and the reason I say that, by the way, in case you went, but wait a minute, that's 2, not 1. Correct. You need to have an even number of contracts in the package. So that's why the minimum package size is 2. Package size. The stop for the entire package is at one location. I have chosen 12 ticks, 3 points, based on account risk tolerance, volatility. You can use ATR, you can use harmonic rotations, whatever works in your testing to show the optimum, stop size for what you're doing. And then once these two values are set or understood, you know them, the T1 first profit target, which is the risk neutral scale, is automatic because it's for half of the package and it's for the same number of ticks in the positive direction as the stop is negative. What does that achieve? The minute this first profit target is hit, the worst that can happen to the trade is a scratch. Okay. If the profit target is not hit and goes the other way, then you take a full stop of 12 ticks times 2, 24 ticks. In dollars, it's $300 in a mini. And then there's the runner. So in this case, if you achieve both profit targets, you have got 60 ticks as opposed to 24. So not quite 3-to-1 risk reward ratio. And then you can scale this up. It's fully scalable, so you can scale. Here's 24 ticks. Four lots. Boom, same idea, same bracket sizes. And in the case of when we had, back in April when we're going to show those sarcastic penguins whose boss and put a tariff on them, volatility went off the map, and this is how that worked. On a 4 lot. And that's what you need to determine and optimize, not curve fit, but optimize over your data in the current market, in your study period or your homework time, away from the live market. You don't want to be changing your trade plan, I don't believe. Change your trade plan during the live trading day. That's stuff that you should do in your study period or, away from the live market. So that's how the risk neutral package works. Something else I do with Bookmap here is in order to trade with Bookmap, you have to use the trade control panel. It has to be you have to choose a way to interact with your mouse to trade. I choose both, meaning I can trade with the chart or the DOM. The chart trading is only in this active data column. The DOMer is only the 2 DOM columns. And I confirm the package size. Then I don't need any of these stops or brackets because I use multi-brackets. And I just click this button again. It stays green. I have all the same data to view up here, and I also have cancel and close all. There you go. Then I have all the data that I want to have that I feel is important to trade right here in front of me on the hard right edge. And I've already explained the little blue line guy over here and the reason for that. These are the migrating volume points of control. Up, 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 boop, boop. Now here we are, right? Boom, boom. I didn't throw this little silliness in there, but I can. Oh, wait a minute. This is the, hold on. Yeah, that is the current one. There are 2 volume points of control. One is the full session, which is the darker yellow, a more muted yellow. And why that's doing that, I don't know. More muted yellow. And one is the RTH session, which is a brighter yellow. Point of control. Oh, new lows. Here we go. They're not too happy with what Einstein and Agent Orange and Random Risk are up to, apparently. Would be a wonderful spot to be short, eh? But not one of my setups. And though I'm pretty disappointed in both myself and the outcome here so far, I'm not going to break my regime or my process. That's a slippery slope to, clicking the mouse like you're killing snakes, commonly referred to as overtrading. And there's probably a lot of things to do with this tool that I'm not doing, but I'm kind of one of the if it ain't broke, don't fix it guys. So, you know, it's broke at this point because of the RTHVPOC not volume profile not resetting properly, but I've got a couple of workarounds for that, and then I just get annoyed every morning. And here we continue to test lower. What do we think we're going to do? Let's see here. Well, what do we have below us? We've got a high volume node down here. Pretty quick we're going to see, yeah, there we go. There's a micro composite VPOC from the 8th. There's a naked volume point of control below that from the 11th. So there is some stuff below down there. Here we go again with the leapfrog on the all-time highs. There's the RTH, and oh, not to be outdone, the ETH guys had to jump over the top. We didn't quite get up here yet. On my micro composite chart, it looks like we did yesterday, or today, actually. I'll have to delve into that. This is what I'm talking about. This is the micro composite, and this is the micro composite VPOC. Looks like that's been taken out right there. So I'm gonna have to figure out why. I mean, it's not a crisis. We're way down. We're trading out the bottom, and I'm gonna get rid of that just to clear up some screen space, some real estate. I don't trade breakouts. I have an error code for them called error code -ER-FOMO in my, or BO. In my world, my brain, breakout is essentially me trading FOMO. And I am fully aware that it is a very valid trade strategy, made millions of dollars for the turtles, but it doesn't do. I'm just telling you how I think about it. I'm telling myself here how I think about it. I'm just looking at these. Doesn't do me any good. This is 5 handles wide. That doesn't do me any good. My trading stuff is all inside of that window, huh? So it's not helpful. What I like to do is keep them, as I mentioned earlier, at $1 high. I wish you could just set the damn thing at $1 easily, just somewhere, click, and have it work, but it doesn't. So there you go. Same way with that. And the best part would be if anybody knows of an alternative to both of these platforms that works reasonably as well, let me know. I'm sick of dealing with it and paying for them, It's the cost of doing business, but like in anything, if you can reduce your costs and maintain the same revenue stream, well, that means your net's better, isn't it? So looking at this on the grand scheme, what's happening here? Well, higher highs, higher lows, the market changed. Boom. Is this a sell the pullback? I guess so. What do we have now? We have lower highs and lower lows. You can look at any market in any time frame or any fractal and make a case for both sides of the trade. The joy of trading. The joy of trading. And every so often I try to make a point of pointing out this is the way I approach the market. Whatever you do or anyone does that yields consistent profitability, absolutely don't change. Ooh, the boss is calling. That means there's something good to eat. You know? So, I'll be right back. So is this the capitulation sell-off everybody's been holding their breath about? I guess maybe it is, huh? Now, bear in mind that we haven't even reached the low of 6 days ago. Right here. And we did all of this based on non-farm payroll. I'm not able to do this because I'm vetting the trade, so I'm not going to break my process, but I sincerely hope that if you're not vetting one of the IB trades, you were able to take this overnight low stat, and that's a perfect test, and get short somewhere or another. This is obviously rearview mirror analysis and trading, but the truth speaks for itself, right? Is self-evident. Looking at it on a Renko kind of a bigger scale, sell the pullbacks. I guess you could say. And I'm going to have a look at the new Zuckerberg plans another overhaul of Meta's AI efforts. Okay. He's been hiring people like crazy. I heard actually from somebody, a person that I trust, an ex-Microsoft engineer, online guy, but Meta is offering a $1 million cash bonus, not stocks or options, cash bonus for a qualified AI type developer to join. Never mind. And if they're offering you a cash bonus of $1 million, imagine what the salary is and the benefits. Holy Christ, look at this. U.S. Department of Commerce adds 407 product categories to the steel and aluminum tariffs. Wow. That's kind of a lot, it would seem to me. That's amazing. By golly. Okay, I am going to dust off now for the midday kind of a deal. The family, the cats usually they have a interdiction here, and they insist that I shower, or they're going to ignore me for the rest of the day. I get up early, it's around 6-ish or a little before, and start this process, so it does feel pretty good in the middle of the day to take a break and shave and shower and all those kind of humanoid kind of things. I would say keep your powder dry, manage your risk. Remember that as a trader, your ultimate prime directive is account preservation. And that is done typically with risk management. And that means not over trading and only taking specific vetted trades that you have pre-identified have a positive expectancy. Otherwise, you're just gambling and peeing in the wind, you know, in my opinion. So there you go. And I'll be back shortly with a couple of smiling cats. Now we have that micro composite MCVPOC down below us here. This is an extremely FOMO prone price action here, so be really careful. If you're selling the pullbacks, you're should consider yourself a genius, and congratulations, but be real careful about FOMO. I'm gonna get away before I think about it.
Deixa de preguiça, deixa o cobertor. Deixa que hoje eu vou ser o teu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu, deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa o cobertor. Deixa que hoje eu vou ser o seu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu, deu esperança de beijinhos. Não espere tanto, tanto tenho a dar pra fazer o frio evaporar. Deixa de preguiça, deixa o cobertor. Deixa que hoje eu vou ser o teu calor. Sei que tá friozinho, já sei como é. Sei que o nosso amor aquece quando quer. De manhãzinho o sol nasceu, deu esperança de beijinhos. Não espere tanto,
pienso en qué pasó y cómo me afectó las horas que pasé en aquel bus. No entiendo bien por qué mi abuelo distraído se bajó sin mí. Yo seguí. Acapulco no era un lugar para una niña de mi edad. Con solo 4 años enfrenté la soledad. Del bus te vi pasar y la calle caminar, y a pesar del miedo que me dio, no pude ni llorar. Eres la niña perdida, el chico me preguntó. No había entendido que esa niña era yo. Después de 6 horas encontré donde bajar, crucé la calle, di con el lugar, se abrió la puerta y todo mi mundo me abrazó. Estaba sola frente al mar. Nunca me voy a olvidar. Estaba sola frente al mar. Acapulco era el lugar.
Estava a viver, caminhando na vida, sempre chorando por uma nova ferida. Mas como até que de um mato nasce uma flor, muitas vezes é da dor que vem o amor. Eu que pensava que era um engano, olho seus olhos de luz e vejo um anjo. Esqueci dos tropeços, esqueci das caídas, em noites perdidas vou encontrar o meu lar. Foi do céu
mis noches llenas de amor. Corazón, hablarle en poesía, cantarle a tu alma y llenarla de ilusión. Amor, te quiero dar amor cuando sientas dolor. Quiero acompañarte hasta que te salga el sol. Besar todas tus lágrimas y darte todo mi amor. Ay, amor, jamás seré tu dueña. Yo quiero que me elijas cada día por amor. Corazón, todo lo que viví fue para prepararme y reconocer tu amor. Amor, te quiero dar amor cuando sientas dolor. Quiero acompañarte hasta que te salga el sol. Besar todas tus lágrimas y darte todo mi amor. Amor, te quiero dar amor cuando sientas dolor. Quiero acompañarte hasta que te salga el sol. Besar todas tus lágrimas y darte todo mi amor.
flor querida, la noche ha llegado acá y en tu vida puedes dejar la soledad, siempre contigo ella está. Si duérmete, mi angelito, sueña con tranquilidad. Duérmete, pronto los sueños llegarán. Contigo ella siempre está. Llegó la estrella, llegó para ayudarte a dormir. Y sabes que con ella nunca tiene que sufrir y con amor puedes vivir. Si duérmete, mi angelito, sueña con tranquilidad. Duérmete, pronto los sueños llegarán. Contigo ella siempre está. Contigo
All right, so here we are. Huh? Well, NASDAQ is having a problem. Yeah, NASDAQ is having a problem. Okay, so what happened? What'd you guys do? Break the market? I leave for a minute, and what do? You break things. I can't leave you kids alone. Now this is kind of weird because now the now Bookmap's not properly drawing the POC. Notice that these are real light volumes. Well, we are certainly in a situation where we could have a 12-to-1 trade. And that would not be, that wouldn't be even a little bit surprising. Actually, we're not. Now that the minute I said that, I looked at it and guess what? We're not. Well, shouldn't be any big surprise what this looks like. The higher time frame. Micro composite. This is this is market profile. Thick Renko charts. Pretty simple. Is anybody taking credit for this, I wonder? Jackson Hole, the Wyoming Blockchain Symposium. Oh, yeah. That's right. That's exactly. There was Trump, Random Risk, or Agent Orange had the mic and the camera, and now it's the little blonde gal. It might be over by now for her, though. Yeah. She ended her remarks, okay? Now it's now Random Risk is at the wheel. Okay. Anything is open. Nothing's off the table. Okay, so we'll see what's up now. I refer to this as random risk, and I do that not as an insult, but as a statement of fact. If you don't, one of the first things a project manager or anybody should do in any kind of a business or project, and that's what we're doing here, is identify the risks that could happen, that may, affect the outcome of what you're doing, and come up with a plan, risk mitigation, right? And in this case, we can't do that. Simply, now, there was a press briefing was scheduled. The Trump signing the congressional bill was supposed to be at 12, and now it's at 1. So they're getting better about announcing when they're going to have these opportunity, these photo ops or camera opportunities. But until that's really nailed down, that is a random risk that we cannot mitigate. So that's what it is. And there's no question about the fact that it can definitely affect the market. Well, there's Friday. Here, just look back in time. Here's where we're gonna have tariffs and all the various comments associated with that. Now we postponed them for 90 days. And now we have this. Who the hell is that off? Why'd that do that? This is all unplanned risk. Just, and not anything necessary, just something that he felt like he needed to do to the economy and to the country. So that's why I call them unmitigated, random risk, because you don't know what that might be. Here was a non-farm payroll story. And then irrational exuberance, and now maybe we're having some reality sink in.
vão viver tempo de glória.
You can certainly see the effects over here. You want to inspect the thing?
O tempo de Deus não tem razão. Até o dia que soltarmos que nos foi presenteado esse pássaro na mão. Seu assovio é tão lindo, é o canto do perdão. Pois é, as coisas chegam quando passam. Se o que aconteceu de errado, veja bem pelo outro lado, é o que faz você agora. Todas migalhas do passado vão viver tempo de glória. Pois é, o tempo de Deus não tem razão. Até o dia que soltarmos que nos foi presenteado esse pássaro na mão. Seu assovio é tão lindo, é o canto do perdão.
Right out there. Okay.
Salgo a caminar al sol por nuestro lago y por donde mire te veo en todos lados. Tantos recuerdos, cuánto hemos pasado. Ay, amiga, cómo te extraño. Ay, amiga, te extraño. En nuestro universo
Thing is irritating.
todo era posible. Cantamos, reímos, bailamos y lloramos. Nuestra amistad nos hacía invencibles. Siento tu presencia
In the rearview mirror now, you could safely say that, boy, was this IB continuation a great trade, huh? Or this is not actually technically an IB continuation trade because it hasn't come back up and retested the IB. It got the overnight low, so that would be an overnight stat. But, you know, as with everything in the rearview mirror, it is crystal clear. Obvious as the nose on your face. And I hope everybody's doing well. This week, let me just, first of all, welcome. It's my virtual journal. My voiceover here we go for a new low. My voiceover here is to give insight as to what I was thinking. Obviously, the video captures everything I'm seeing. I start to stream every weekday at 8 o'clock in the morning, Central Standard Time. All times that I refer to here are Central Standard, or that you see on my screens. Do a setup, greeting setup. Review the numbers and reports for the day. Do a in-depth pre-market and what happened in the overnight trade and what I expect is going to happen in the morning. Things that could have, affect the day. And then we have the open, and the stream is live and continuous from until 1500 in the afternoon. The purpose for that is, it's 7 hours actually. The purpose for that is to for complete transparency and accountability. No trades are taken by me off the stream. These accounts, so that's that. That's that. Nor has there been. And that, my fellow traders, brings you up to speed there. I don't have any indicators on my charts or my book map. It's basically market profile, and you might call it supply and demand market profile levels. It's approaching trading as a business, consistently profitable business rather than video game or gambling. In order to do so, you need to approach it from a probabilistic point of view. And I talk about that quite a lot. So, review back in the stream and you'll see that every night after the stream is over with, each evening or afternoon, through the course of the day, this, timestamp chapters are updated. I update them as we go along. And then at the end of the stream, those are also applied to the description. So easily you can just jump what you might be interested in. Certainly, you're not going to watch all 7 hours, nor do I. The reason I stream to YouTube is for accountability and transparency. Also, and a big also, is that I can review the streams on any device. I don't have to be standing here on one of my desks. The titles of all the streams are for the last quite a while now. Encode a hashtag and the date, day, month, year on the title, so it can be, I think, more easily searched by specific day. Seemed like an idea. I did at first just encode the day, and then I thought it'd be better to have the hashtag. No, the VPOC migration here, they just keep wanting to get lower. Sellers are... Now, what is this? What is happening now? Do you imagine? I'll tell you what I think it is and what I'm pretty sure of. The futures market specifically is a zero-sum game. If you're been around it at all, you know that the trades are referred to as futures contracts, not shares or stocks or issues or whatever, but contracts. That is the correct terminology. Each time you enter a trade, it is a contract between a buyer and a seller. There is never, ever a possibility of more buyers than sellers or vice versa. By the virtual mechanics of it is a contract between a buyer and a seller. How can there be more of one than the other? There cannot. When you hear somebody say, well, the market went down because there was more buyers and there's more sellers than buyers, just, laugh at them and turn around and walk away, because that's not the case. Cannot be. The market goes down because more aggressive sellers on the ask are coming across the inside bid and hitting the bid. These guys are passive and these guys are active. And away they go. And the other way around when it's going up. Now take it one step further and think about what it means. For every buyer, there's a seller. It means that for all of these guys selling this way, all down, sell. Somebody's on the other side of this buying. If you've bought a whole bunch of contracts and you're down here, how are you going to make a profit? The market goes up to go down and goes down to go up. If you want to look at it on a perhaps more different scale that you can relate to, the market goes down to go up and goes up to go down. On a smaller time frame, in a different fractal, goes up to go down and goes down to go up. And now what's it doing? All of the guys that were selling, all these people buying for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days, all of these buyers, there was someone, a counterparty, on the other side of that trade, selling. How would that seller make money? Now, it's my opinion that the people with deep enough pockets to be doing that are the higher time frame. And so they let all the retail folks do this, and then they do this. And they shake them all out. And they may shake more of them out to take their profit. Or even if they're hedging for future, even if it's an options hedge, they don't want to lose money. They'll take that hedge off. But that's how the futures market operates. And that's why so often you hear people talk about, oh, they targeted my stops, they ran my stops. Well, that happened for two reasons. Number one, I just got through explaining that the market goes down to go up and goes up to go down because it is a zero-sum game, and it takes two to tango, right? It's like, to coin an old phrase. And so, let's imagine that we went up here, right? And this was a continuation up from yesterday, which was flat. And where do you suppose all of these buyers had their stops? Under each swing low, perhaps, under the POC, perhaps, under the the low, perhaps. And what happens if this guy wants to get down and get his money back and make money? What's he do? He takes the market down and plows into those stops because he sees the liquidity sitting in the market. And now what's happening? Well, we had this, and we got this, and we had this, and we got that. Where's the stops? Where are these guys stopped? Probably right up here. Where's all this stops living? Right up here. What should you expect? Maybe not today, maybe not tomorrow, but you bet your sweet butt it's going to get by there. It's going to go into those stops. That's what happens when they say that, that's the stop hunt or whatever it's called. It's not a hunt. It's not you. It's not personal. It's liquidity. And if you put your stops in with everybody else's liquidity, then increases your probability of being taken out. Probabilities. There you go. That's my story, and I'm sticking to it, boys and girls.
Mas não venha me pedir pra andar de ré, pois é. Ah, já sou gato escaldado nessa trilha ando descalço. Não é você que vai fazer eu tropeçar. Ou duvidar, ou tropeçar, ou duvidar.
Well, I went to fill up my glass. What happened? Usually when I do that, then the market makes some move that I've been waiting for, a long time. Maybe not. I'm not insinuating that there could be will be a squeeze, but this is would be a pretty ripe opportunity for one. Basically, completely nothing burger yesterday. 66% of volume, completely balanced, and now a directional move down. This could also be a situation where they're positioning for what they expect is going to be a rate cut announcement. And then irrational exuberance to the moon, Alice, None of these things would be surprising to me. That's the joy of the market. You never know. I mean, you literally never know. The hell is this doing here? This is all wrong. Something's all goofy here. $8.75, 64, 68, 75. It's clear down here, right underneath the settlement yesterday. So I'm not sure what the hell this is all about. To be honest with you, this looks like it's misplaced. This one's misplaced, I believe. Here we have. Come on, thing. God, I'm sick of this shit. 64, 68, 75, which is even familiar to my poor old memory. And you can also do... So 64, 68, 75. Now, was that it? This should be there. Why it's here, I can tell you why it's here, because it's moved down and I didn't pick it up. 64, 68. Now I'll explain this in a minute. I'll explain this in a minute. $64, 68, 75. Well, right on top of our naked volume point of control from yesterday and settlement. Okay, and why was it up here, and why is it really down here? Because see how the days have traded lower. This has been pulled down to this level from up here, simply because of the day's trade. That's what I believe. And that makes sense. So, and now once this day is included in the micro composite here, which I'll do tonight, or just after the ETH open, when I get my reset everything back to full session for the overnight or the ETH session, this volume here will bring this microcomposite VPOC, I would suspect, a bit lower. Now that's, remember that these are dynamic. Anyway, so there you go. And they're just reference lines. They're just reference points. And one thing that I took home from some time I spent in one of Jim Dalton's intensives, the higher time frame has no freaking clue where any of these things we find so important are. All-time high, yeah, I'm sure they do. All-time low, maybe the POC, maybe, but they don't chart typically. And especially the micro composite, that is strictly something that retail people have cooked up. It started back with Mike Murad Asker, FD71. He's the one that's the first place I heard about micro composites. Higher time frame traders, according to Dalton and other people who have been in that realm, have no freaking clue where these levels we're all excited about are. And what does that tell you? Well, it tells me that a lot of this action that we see based around these levels are, retail traders picking each other's pockets. All these, fib this and fib that and moving average something else. That's all. They don't, maybe they watch the 200 moving average. Maybe. I don't know. Never been traded in that realm or known anybody like that personally. So I can't speak to it. The only person closest I ever got to somebody that traded in that realm was Jim Dalton, where I would hear these things come out of his mouth. Hey, Richard, afternoon. Quite an interesting day, huh? Yesterday was flat as a board, the major nothing burger. Today we started out kind of nothing-ish, and then somebody got the idea that they could better get it lower here for a while. Agent Orange is on stage at the moment. Unless it's over with now, I don't know. It's kind of actually weird because I don't see. What was it? No, that's over with. That was at 1. He took the stage at 1. Took the handoff from the press gal, and it's over with now. So yeah, I forgot it's at power hour already. The hell is all that? Did you see all this jumping and jerking around with the POC? That was pretty weird. Look at that. How the hell is that possible? Whoa, that's not good. it's kind of makes sense. Here's 74.23. Here's 73. Yeah, 73, 74, 97. Okay, that makes sense. What is this crap? Well, now it's not good. Yeah, there we go. Now it just doesn't calculate. Oh, that's not good. Oh, man. What a pain in the ass. Well, what the Sam hell is that doing? Right there. No? Go away, data aggregation, you stupids. Well, maybe my brilliant plan to keep the entire session in view all day has lost a bit of its brilliance. That's pretty weird. Well, that's pretty undisciplined. Even if you say it fast. Huh? I'm telling you, the more this is my heat map or book map version in IRT. There's the dome. Now, one of the problems with this and why IRT and why bookmap continues to be a better deal is this is just a couple of minutes, right? And you can't get it. I can't figure out how to get it any closer. So you cannot see even remotely the entire session. I cannot. There's always some weird crap going on in there. But it does do everything. It plots the liquidity, which can be controlled up here. I've built it that way. You can trade it. Pick the account you want to trade. Here's the dome. Now, I've never gotten into trading with IRT far enough to figure out if you can put in a bracket or not, to be completely honest with you. I would think because of the flexibility and the code capabilities of it that you could do so. But you can't make that move any. I don't know what the hell that is. That's not what I had in mind. That's pretty handy, huh? Oh boy. I don't want all of this noise here. I was trying to go like this. And it's going the wrong way. I think. Okay. Well, it's having an issue recalculating all this stuff. That's for sure. Well, you see why we use IRT, bookmap. There we go. Yeah, it's a shame, but maybe it's got some other functionality that I just don't understand. But I got it built. I built it that far, and that's as far as I got. And that's the unfortunate part about Bookmap. My Jigsaw also has a heat map, which they call Auction Vista, and have had for 10 years. And it's a clunky, junky, goofy looking thing that Bookmap is head and shoulders more scroll in, scroll out, do all that kind of stuff. User friendly, but I really don't like this story right here. I don't like the fact that POC changes locations when you scroll in or out. That's pretty crazy. Would there were a good alternative? I would imagine that there would be a dramatic shift by a lot of people, because a lot of people I talk to that use these platforms are similarly, they're expensive and they have, these kind of goofy things. The next thing may be to approach the problem from a different angle. Do I, rather than find a replacement for them, these programs, or, a substitute or whatever, come up with a different view, learn to work with a different view of the market that's not so complex. I never had, I've traded pretty successfully for a long time with Trade-Evade before it was purchased by NinjaTrader. Then I had nothing to do with it. But, volume profile, I think you could see market profile. It didn't export any levels or do any of this magic stuff at that time. And I believe that the session prices are a real big, important thing. I don't know, frankly here, I don't know of anybody, and this is strictly because I don't know of them. I would imagine there certainly are people who execute and trade completely with Investor RT. I don't know of anyone. Most everybody that I know of, that even thinking back in history, 15 years, executed on their broker platform, for example, in those days. And the two of those data sure as hell didn't mix. And used the IRT for charting, which is extra goofy. That's an extra loop of stupidity. These one-stop shops are really convenient, like Bookmap with multi-brackets and all these things are great, but I can't think of anybody that executes on IRT, frankly. I think there are guys or traders, I should say, not guys. I think there are, when I use the term guys, I'm not talking about gender specific. I'm just saying, warm bodies that execute with Sierra Chart. At one point when I had Sierra Chart, I started out back in futures with Bookmap, which is probably the best dome floating around out there. Without it, hands down. But then the rest of their stuff is, the rest of the products, charting, and they started out only working with the dome and only caring about it. And then when Bookmap hit the scene, they tried to come up with Auction Vista, which never has gotten anywhere, never matured. And they added a chart package, which was kind of crappy too. Executes well, super fast, never has a problem, very accurate. But that's just trading on the dome, like you would be doing here. At one point in time, I built a dome I configured a dome in Sierra Chart that replicated pretty much to the T, complete with, stacking and pulling columns and all of that stuff. IRT, Jigsaw. And then I kind of got shifted off to market profile, where I picked up IRT. And now this latest go around for a few years, Bookmap seeped into the mix, and it's pretty, it's pretty addicting. It can get, because when it's working good, it is very user friendly. If you want this complexity. If you don't, TradingView or TopStep X or one of those, if you want to look at a 5-minute chart and no bells, no whistles, no nothing, but executes, there you go. And maybe that's the way. Maybe that's the thing to think about. That's certainly a consideration. I have never seen Bookmap do this story like it's doing here. I've never seen that. And I'm not saying that it hasn't happened forever. The key thing is seen that, noticed it. What it's doing is aggregating by pulling these together. It's aggregating that data, which really screws me up because I want to see the whole. Maybe it's when I just drag this out that it does what it did. So maybe I need to stop doing that. Oh, Anal Andy over here wanting to get the blue line right over at the edge. Because you see now that just scrolling it, or winding the mouse around, it did not compress these, and it's reporting normally, and I can still see the screen. It is kind of disappointing that I have all this wasted space going on over here. That's why I started doing the pull-out method. Hey Alex, bonsoir, ça va? Yeah, quite a day, interesting day. Pretty much especially after yesterday with that nothing burger, and then, all of a sudden some longs started getting spanked over here. Just a word, seasonality wise, remember that these are historically the slowest, lightest liquidity 2 weeks in the trading year. The only two that are lighter or less liquidity is the Christmas New Year break, or period. And we have the Fed, the FOMC, that are in Jackson Hole. Now tomorrow will be the FOMC minutes. That's not the rate decision, but it's the minutes. And then Friday, Powell will, the rate, what is that? Stand by, before I mislead everybody here. This week. So here's the FOMC minutes at 1300 as usual. But then Friday, the big dog, they trot out the big dog at 9 o'clock in the morning for his big speech. And that's, you can bet you can hear a pin drop on the exchange floors when that's happening. I hate these things with, don't like that guy. So there you are. Tomorrow then we have, remember, 1300 Central Standard Time, FOMC minutes, meeting minutes. Crude oil is, of course, important, and especially now that we have all this saber rattling or saber putting away or whatever they're trying to do with the Ukraine story. And then Friday. I don't see any, the usual. After the Trump, whatever he did, signed something, and then the press briefing from that little blonde gal. Levitt, is it? Maybe? Not trying to be insulting, I just don't really know her name. Yeah. I had once upon a time, a long time ago, I had a Ninja Trader. And I do mean a long time ago. All right. That's pretty weird. So if I stretch this out, if I go like this, like I have been, well, it's doing okay now. That was pretty strange that it was this was disappearing and it was just a straight line down to here, which is obviously exactly not what I want, Okay, where are you seeing these now? 64, 65. Where are we talking about these icebergs, this size of icebergs? I know, what time of day, more or less? The story behind an iceberg is, if somebody, I don't see them here on my chart that you're talking about at, oh, here maybe, huh? Yeah. Like here? Okay, the story with an iceberg is it's an order type. If you want to, icebergs are over here, so this has got to be one of these little guys with a little iceberg symbol under it. And I'm not seeing 29,000. So, here. 2090 buy side for 16 contracts. What the way it works is an iceberg order, and I don't see any of them now drawing the line, but if somebody wants to sell 2,000 contracts, well, if they dump 2,000 contracts over here in the book, that would skew the book in a dramatic way. For example, let's say you want to buy 2,000 contracts and you throw an order in for 2,000 contracts. How many price levels are you going to take out getting to 2,000 contracts? You're going to drive the price way up because the cumulative total of all of the resting liquidity in the book doesn't equal 2,000 for a long ways up there. So what they come up with is an iceberg order to not skew the book and to try to get the best price that they can. What this does is it just drips orders in and keeps refreshing as orders refresh, as buying refreshes. You know, they hit up here and then it'll refresh, and then it'll hit over here and then it'll refresh. And they keep doing that to try to keep the price, the net or the volume weighted average price for that order in a specific area without skewing the book way or moving the market dramatically. What these things do when we'll hit one of those is it'll show that iceberg will just keep feeding in, and the other side will be accumulating, or accumulating. That's the right word, I guess. That's what I think. That's how I understand it. Look at there's a lot of them around here. Last night, I don't know whether we can show that or not. Last night it was pretty well. Yes, look at here. Last night, right after we opened the ETH session, look at all the liquidity that's flooded into the book, and this held over through the open. There's 6,043 contracts traded on an iceberg right here. All of this liquidity flooded in and stayed there all night, putting in a floor for the overnight. So there's a lot of jockeying going on at this moment to get price and things the way they want them. I'm assuming ahead of the Fed meeting and what they think is going to happen to the interest rates and prices. That's as best as I understand it. Oh shit. Sorry about that. This is the open. This is the open of the overnight right here, ETH. And let's do this as a little more. Look at the liquidity that piled in there and stayed in there all night. Putting a floor, put right there, they all hit at the same time, or those orders all came in at the same time, and they stayed there all night long and put in a base. They were support the entire night. And now the RTH session opens today, and that liquidity bled over to here when all of these orders were hit. These iceberg orders, these big ones. Let's see if we can see some of them. There's 3,500. Now, remember that this thing is, by me winding in or out, you see how it splits up the orders? So this aggregates. Bookmap will aggregate these orders depending on how tight I am on the timeline. Watch this 2,878 over here. Now it's 3,553 because these orders up here have been consolidated or aggregated into this one. So that's a function of Bookmap. It will aggregate all of those. You can set it to not do that, but then you have icebergs and stuff going all over the place, and I don't want to have that happen. Yeah, I mean, that's the whole purpose of an ice. Now see what we have here? See all these small icebergs happening along here? And now our big one down here is not so big anymore. It's 800. And all of this liquidity is being chewed through. Now they came in, they continued on with it till 9 o'clock, and then it traded out and they lifted it off. And the minute they did that, down she went. The minute that liquidity that had been putting in the floor or the support lifted off at about 9-ish, down went the price. And now this thing is doing this single level again instead of the step. God damn, that's really frustrating. I don't like that at all. I'm going to have to, I don't know what. I'm going to have to do something. But it's command iceberg buy, right? Well, an iceberg, either a buy iceberg or a sell iceberg. The whole purpose of an iceberg is you have a large order that you want to fill, buy or sell, and you do not want to push the market with the size of your order any more than you possibly can or than you have to. If you or I put in, 2 contracts or 5 or 10, the market just absorbs it and doesn't care. It doesn't even, has no effect really as far as price goes. But that's why the ES is something that we all trade a lot, because it is a liquid market. Typically, you can always get in and out. If you're in a very thin market like copper or one of the commodities or something, you may not be able to get out for 4 or 5 price levels because there's no liquidity. Nobody's there to make a market or buy. Take the other side of your trade. As I understand this now, I mean, I'm just putting out what I think. But that's what I think. No, I don't pay any attention to them, frankly. I am more concerned about. Sure, I look at icebergs that are doing some kind of a big liquidity or absorption. I look at these delta bubbles or balls. But right now I'm focusing on the IB, as you know, if you listen to the stream at that early enough point in time. At the 2 IB trades, I'm vetting those. And I don't really pay a lot of attention. I was watching this liquidity last night, and I don't pay a lot of attention to icebergs and stuff through the day. And I know other people do. But I'm not sure what difference it makes in a liquid market like the ES. And for example, if I see this 2,000, first of all, it's aggregated. So if I see these 2,000 contracts right here, and I wind this out, this might only be a few hundred. That's still a lot, isn't it? But is that going to have some effect on the market? I guess so. But the short answer is I don't really have a strategy around icebergs. Stops are more of a thing for me because I see where they are. Like you can bet your bottom dollar that there's a bunch of stops living right up here. All these guys that have been going short down here, where are they putting their stops? That is liquidity, and that's up here. Resting liquidity. So that, in my opinion, means that we'll get there one day, and that'll be, that'll serve as a magnet for trade. Now I'm busy talking here, and we've gone right through the market on close orders, and absolutely nothing happened. Just like last few days. We're at 1453. The market on close orders are out at here's the market on close orders. There's 872 million buy side S&P 500, 203 million buy side on the NASDAQ, 300 million buy side Dow, 211 million buy side Mag 7. And I'll be honest with you about that. Sometimes we see billions over here, you know, like 3,096 million the other day. Market starts to close, and you see very little movement. It beats the hell out of me, frankly. And I kind of think about that like, in my mind, it's kind of more like icebergs. I don't know. I've even thought about turning the iceberg detector off in this thing, which I can do easily. Because I pay very little attention to it, and it's soaking up computational power, right? Which, even though this is the biggest machine and CPU and stuff I could get, or that I build these machines myself, so you know I have some knowledge about how it goes together. The only mistake I can think that I did here was that I'm not in a position to change it now. The GPU maybe upgrading the GPU would make a big difference. It's a 3060 it's a NVIDIA RTX 3060, 12 gigabytes of RAM. But I think the thing that has me worried is I used an Intel i9 processor this time, a 2900K i9, which was the latest and greatest at that time, and it's got 64 gigs of DDR5 RAM. So there should be no reason why this machine chokes about computing anything at all, but we all see that it does, especially in the mornings around the recalculating this RTH volume profile. So I don't know. And here we approach the close of the trading day, and thereby the stream. Well, the recap is going to be pretty straightforward, I think. There's what we did today. There's where we opened, and here's where we are. That tells the tale right there. We sort of have unfinished business. We have a poor high at the top because there should be, well, actually it's not. No, it's not. Actually, it is excess. Single prints. Sorry about that. The micro composite, what did we do? Well, boop. Are they repositioning ahead of the Fed? That's my guess, because there's also some big numbers coming out, especially next week. There's, you know, PMI and CPI and a lot of core stuff that has a big impact on this rate cuts, and everybody seems to be, you know, they don't care what it does to the economy or the people or anything else. They only care about themselves and making some money, so they're all excited about the rate cut. Whether it's justified or the correct economic decision to make for the country or not, seems like the market folks don't care. And unfortunately, at this point, neither does the random risk squad. So, and I'm not an economist, but I just, you know, I listen to what I listen to and who says what, and then I make a determination from that. NASDAQ, if you're trading the NASDAQ, you're a happy camper if you got short. That's for damn sure. ES as well, if you know, bought the pullback or sold the pullbacks. 2 nice runs down. We did not have any squeeze to adjust this market. So we're going to go into the overnight heavy short inventory. And we'll see where that takes us. And we're red across the board. We're down 0.63% on the ES. Volume is about a little bit lighter than normal. And our old buddy, the book map over here, you can see all the liquidity jamming in for the MOCs, I guess is what that represents. But we're getting ready to close in a minute. And I will wish you a fond farewell. We're back in school mode here, so. But it's convenient because I don't have to take our daughter to college until later today. Hopefully they get this drama sorted out with TopStep. That would be a pretty big deal for me. Pretty disappointing. And there, 30 seconds or, 15 seconds to the cash close. They're trading the hell out of them. Look at them go. And the liquidity is just thick. Now we're several handles wide here, so be careful. We're a couple handles high. Are they going to get the VPOC to move? Oh, very definitely. There it went, right there. Right back to where it had been before, the second I said that. And remember, it's anybody can figure this out. Nothing's magical or mysterious. It's just the POC is the price level at which the most contracts have traded in the session. The minute this level got more contracts than this level down here, up she went. That's all there's to it. And we are officially closed for the cash close. I will be back on the stream tomorrow morning at 8 o'clock a.m. Central Standard Time. Smack the thumbs up on the way out and subscribe. That would be great. Help the channel. Tell your friends. Send money. Whatever, I'm pretty depressed about this thing. I don't know what to think about this moving the VPOC around by scrolling in and out. That's the dumbest thing ever. Look at that. That is just about, Alec, bonsoir, ça va. A bientôt. I think that's about most of the French words I remember. Have a great night, everybody. Richard as well. I guess you already dusted off. No, maybe not. Thanks for coming by, anybody, and chime in the chat. It's nice to have a little feedback, camaraderie a bit. This is really disappointing right here. I don't know what to think about that. Son of a gun. Adios, Richard. Take care. Have a good one. Happy trails, amigo. Wow, I think I'll make a couple of screen snaps of this, I guess. It is on the stream, of course, but still. That just absolutely sucks. It's got to be to do, or it's got to be a result of the data aggregation, I guess. Okay, well, have a great night. I'll be back at 8 o'clock in the morning. Tune in for the set up the numbers that we have approaching us and the pre-market, and then the open, and of course the trading day. Tomorrow, don't forget, 13, if you are or are not here, 1300 tomorrow afternoon is the FOMC minutes. And then Friday, the all-important, that's at 1300 in the afternoon, Central Standard Time. And then Friday at 0900, Powell will be giving his big speech. I'm not sure whether the minutes, that's simply the release, or whether there will be any Powell conversation around that. But you can bet your butt everybody's watching the Fed. It's a Fed watch. Have a great evening. Go do something for yourself and your family, or your whoever else it is that matters to you, and or yourself. Get away from the screens. Save your eyes. Keep your powder dry till the morning. See you back at 8 o'clock. All the best.